What up, what up, what up, what up, what up? What's up, everybody? Welcome back into another live stream. It's been a while. I feel like I'll start every live stream off by saying it's been a while, it's been a while, it's been a while. I know. But we're here, and I'm glad you guys are too. What's up, everybody? Welcome in. I see you. Robin, DHA, Dennis, Uros, Rodrigo, Larry, everyone. How's it going? I'm happy to be here and happy to be back. Look, I wanted to do a live stream today just to kind of talk about what we're seeing in the market. We obviously have the FOMC meeting coming up here. I'm not expecting a ton from it, but I think it's always important to watch out for, and a good excuse for me to jump on live and talk to you guys. So look, what we're going to do today is we're going to go over the crypto market. We're going to do an entire overview of what the market's looking like. I'll give you guys my opinion on where I think things are. We're going to watch the FOMC meeting today. I'm going to talk shit about Jerome Powell and go on a crazy rant for about 10, 15 minutes at some given point. I'll answer some questions until my mind starts going a little bit blurry, and then I'm going to go ahead and hang up the gloves for the stream today, okay? So if that works for you, everybody, just do not forget that if you do enjoy the stream, you find it valuable, as per usual, smash that little like button, touch it right on its little nose, and let's go ahead and let's get straight into it, baby. So with that in mind, again, like I said, let's just do a general overview on what's going on with the crypto market here, because a lot of interesting things are playing out. So what we can see starting off is that the crypto fear and greed index is now back at a 63 level, which I think is actually a pretty damn good thing. This thing got fast, it rose fast, right? We started to see nearly extreme greed at one point. We did see a good bit of euphoria here in the market. So seeing this bad boy pulling back a little bit is a good sign, in my opinion, just showing that the market is in a cool down phase. It's in a bit of a corrective phase, even though prices aren't particularly absolutely nuking. Now, overall, though, if we do look at, say, the 1 day, things are casually sliding downwards. On the 1 day, even on the 1 week, we are starting to see most cryptos down a little bit, some more than others, right? Fartcoin, Virtual, and Pump are down the worst in the top 100, but most like ETC, Render, SHIB, Trump, 5-10% pullbacks, it's nothing to be scared of. Who cares? Not that big a deal, because at the end of the day, if you just look at the month, for example, almost all of these pullbacks that we're seeing across the majority of these cryptos on the last week, this is just a retracement. What happened is that the market absolutely ran. It went very far and went very far very fast. And what we need to see at this point is, of course, some people take some profits, people slow down a little bit, let the bears win a little bit. Let's see some people get liquidated. And then what I think is going to happen is that the crypto market's going to bottom out. It's going to try to find some support. This retracement that we're seeing is going to come to an end. And towards Q3, Q4, we're going to try to see this crypto market run again. That's what I think is going to happen. And I'll kind of show you some of the charts that align with my general thesis. Now, when we first and foremost start off with total one, okay, what you can see is exactly what I just told you about, right? A lot of what I've told you about. What you can see is that the crypto market absolutely ran, and now it's just in cool down mode. So total one is the total market cap of the entire crypto market. And while everybody's freaking out saying, this is a dead market, the market's over, the bear market's here, the truth is that the total market cap of crypto, guys, is basically in the same place that it's been for the last 2 weeks. This is just a cool down. It's a reset. And these things are natural. And truth be told, if this has been bothering you substantially, you got to thicken that skin up a little bit, because trust me when I tell you, it gets much worse than this, right? So what we can see all in all, though, is that, look, the crypto market ran. We saw full Fibonacci extensions, and now it's slowing down. Look, you think this is coincidental? Of course it's not coincidental. We saw the crypto market set the high. We saw it set the low and started to work itself upwards. Now, let's see. It's been a month. I'm going to quiz you real quick. It's been a month. When the crypto market starts at a high, goes back down, and then starts working itself upwards, what is this called? What is this little move right here called? The beginning of it. What's it called? I'm not going on until someone answers it correctly, because I'm going to grill you on this every time I go live until you remember it like it's the back of your hand. What's this little move right here called? Good opportunity to drink some water while I'm waiting. Someone got to give it to me. Not quite. Not yet. This little move right here. The second that it starts, oh, there it is. Very good. I saw it from Ratika, I saw it from you, and I saw one other person. Yeah, Gustav. Yep, shout out to you. Very good. So this is called a retracement. So whenever you make a high, you make a low, then you start working yourself back up towards that high. It's called a retracement, okay? And when a crypto starts retracing, what do? We use the Fibonacci golden zone to determine when that retracement is now not a retracement, right? When is this little move not just us correcting or bouncing? When is this us actually actually breaking up. And so when it breaks the golden zone, the door to the upside is wide open. So what happens? The total market cap of crypto goes all the way up. It retraces up until it hits the golden zone, breaks the golden zone, absolutely flies through our first take profit level, which was right here, our second take profit level, which is right here, pushing all the way up to our third take profit level at $3.89 trillion before now slowing down. Guys, this is not a coincidence. This isn't any of those things. This is textbook movement from the crypto market doing exactly what it's supposed to do in order to start making these moves. This is what you want to see. The fact that we're slowing down right now simply just means that the market is respecting the levels it should be. This is healthy. This is normal. This is natural. And anyone who tries to convince you that this slowdown right here is abnormal and that it's the beginning of the bear market just because my leverage trades are down, they're just being emotional. The truth is that this is normal. Now, listen, is there a possibility that this happens? Of course there is. Of course there is. This is incredibly possible, but the truth is it's not very likely. And this little slowdown isn't what's signaling that this is about to happen. This by no means is a confirmation that we're about to crash at all. Okay. And so with that in mind, yes, the crypto market, sure, it is pulling back. It is retesting a little bit. It is retracing over the last couple days in the last week or so. But the truth is it's normal. It's natural. It's what it's supposed to do. And you would expect this to happen. Now, as I mentioned before, my general thesis here is that the crypto market may pull back. It is reasonable to assume it might pull back. Tyler, why? Well, we're going into August and September. And I don't know if you know anything about August and September. They're not always the best months here in crypto. Let's look at crypto market monthly chart. Let's see if that pops up what I'm looking for. Give me 1 second. Crypto. Let's just do Bitcoin. Bitcoin monthly chart. Returns history. There we go. Okay. So what you guys can see here, let's just look at Bitcoin's monthly returns down here. Look at August. August, historically, not a fantastic month, my friends. I'm not going to lie. Now, what I will say is the last time we had a year like this year was 2017, which is when we were bullish all throughout summer. And going into August, it stayed bullish. So sure, there is a hypothetical world where August is very bullish and so is September. But the truth is, historical data speaks for itself. And the fact is, the median return for August is -8%. The median return for September is -4%. So these next 2 months are going to be difficult. It is going to be something that isn't going to just be easy. But the truth is, it does not matter. Because even if the crypto market decides that it's going to pull back, that it's going to slow down, that it's going to start giving us problems, it does not matter. Because let's say, for example, we want to do this throughout the month of August and we want to come back towards these levels. I am firmly under the belief that we will still be able to see this crypto market return. I still think that we would maybe pull back, come back down, try to find some support and see this crypto market continue. It is in my belief that the bull market is not ending yet. It is in my belief that there are still gains ahead of us. And the things that make me believe this are what I can see. What I can see is what's happening from the economy's perspective. In the economy, we are getting closer, inching closer to an environment that is more suitable for risk on assets like crypto. We're starting to see a little bit of clarity be provided from a more regulation perspective and legislation perspective from, of course, the White House and the SEC and much more. And all of these things have introduced even more liquidity into the United States economy and the global economy as we are seeing the M2 money supply continuously in an uptrend. And when you combine all of these things from a more macro perspective, it is going to foster a perfect environment for the crypto market to at least have a chance. When you blend that in with the fact that Q4 is one of the most bullish quarters for crypto, when you blend that in with the fact that generally speaking, this point of the 4-year cycle is bullish, which should incentivize bullishness from people psychologically. When you combine all of these things together, I see no reason as to why this crypto market cannot perform exceptionally well in the last half of the year. Now, you may say, well, Tyler, things change, people change, maybe the market doesn't perform well. And maybe you're right. But I'm not going to go and say that this year will be the one different year of all of the different years that there have been. I have no reason to believe that. I'm prepared for it because I have been taking profits, but it does not mean that I'm going to just bet that this market is going to fall in the last 6 months of the year for no reason. And so my belief here is that, listen, even if August and September are not the best months, if they're not the most fun months, it does not matter. Because all it's going to do is going to offer us opportunities to be able to reinvest some of the profits that we've been taking off the table back into this market to try to compound those gains as it goes to the top side. Because remember, we've been taking profits just in case that worst case scenario is correct. Some people think that, well, the market's just going to crash from here. And that is the worst case scenario, that the crypto market crashes and the bull run ends. And that is exactly why we have been consistently taking profits off the table from this crypto market for months now. The biggest trades that I have, or the biggest sells that I have done in my crypto portfolio in the last 9 months all happened on July 10th and on July 13th, while Bitcoin was at 117,000 and 121,000, where I exited a ton of my Bitcoin positions and many of my altcoin positions as well. And so I am prepared for the possibility that this crypto market does just absolutely nuke, but I just don't think it's extremely likely. And so because of that, I sold some of my crypto, just not most of it. I still have the majority of my positions open because I do believe that this market is still preparing itself for some absolutely fantastic moves. Now, in addition to what I just said, when you look at the crypto market from a technical perspective, I see no reason as to why there cannot be gains sitting in front of this crypto market in the future. Maybe it takes 6 weeks to 8 weeks to get through summer again, or get through August and September. Sure, that is a possibility. But the truth is, what we are seeing right now implies that there is still possible gas in front of us, and that's all we need. We need juice to be able to continue getting this thing going. Now, some of those things that I'm talking about, the majority of it are resets on indicators. So what I want you to see is what's happening here in the crypto market. We saw Bitcoin's price absolutely fly from $98,000 all the way to $123,000. But as that happened, we then saw the market start slowing down a little bit, going into this little sideways consolidationary period. But while Bitcoin is in this sideways consolidationary period, we're seeing its RSI actually resetting very fast, already back towards the 57 level, which in many ways is the neutral threshold for most people's consideration. Now, what this means is that Bitcoin does not need the price to absolutely nuke in order for its indicators to reset to open up room to the upside. And if Bitcoin can make a move like this already, I'm under the belief that if we do go into August and September and this is a red period, we're probably going to see this RSI all the way back down here with tons of room on top of us. We already have enough room on top of us to rally. I mean, look what happened right here. Look what happened right here. But if we do, worst case scenario, see this market start going red for the next 6 to 8 weeks, I see no reason as to why we can't have opened up the door of opportunity to the top side to see this crypto market start to rally towards the end of this year. And so all in all, my whole point here is that sure, the crypto market's been pulling back. Sure, it's been retracing. Sure, it's not felt great, but it's doing something that's natural, something that's healthy, something that is expected. And at the end of the day, even if this does continue throughout August, throughout September, I am vastly under the belief that we will be able to see this crypto market perform exceptionally well in October, November, and December like it has done historically. The median gain in October is plus 21% for Bitcoin. The median gain of November is 10%. The median gain in December is minus 3%, with the average breaking right above that 4% mark. And so all this implies to me is we have very, very good odds, very good chances of seeing this crypto market performing well towards the end of this year. The biggest question is, do we get there, and does it happen? Obviously, there are some years where this hasn't happened. Look, 2019, May and June performed very well, but not so great the rest of the year. This is a different period of the cycle that we're in right now. And different, everything is different right now. Everything is different completely. I mean, you got to think we were going into the pandemic right here, right? We are going into a period in time in which the economy should become easier for the average person. Liquidity should become more available to the average person, all of which should open the door for these green boxes to print throughout the rest of this year. I do personally believe we will have more green boxes here than red boxes by December 31st, but obviously only time will tell. And if I'm wrong, well, at least I was capable of taking profits off the table from my major positions over the last couple months. Now, that is my general position. Okay, that is my general position with where we are in the world of crypto. So what am I doing? That's a good question. So what I'm doing right now, and I'm trying to get through this whole review before the live stream starts in approximately 11 minutes. So what I'm doing right now, very simply, guys, is I'm either very, very slightly dollar cost averaging into my altcoins, or I'm holding most of my major positions, and I'm buying the stock market. Okay, so let me break these three things down. So right now, we are seeing a ton of our cryptos, especially our altcoins, seeing a decent size pullback right now, but nothing crazy. And since I'm under the belief that there are still gains ahead of us, I'm willing to do small dollar cost averages in these moments on something like XRP. The primary reason is because look what's happening with, say, the hourly RSI. Do you see the bullish divergence being formed here on XRP, where it's setting the lower lows there and the higher lows here? It's called bullish divergence. And it means that the lower XRP's price is going, the more likely it's becoming that it'll reverse. And you're seeing a very similar story being painted across the majority of your altcoins. Look at Solana. Boom. Look at SWI. Boom. Look at XLM. I mean, I don't need to keep going, but you get the point. Many of your altcoins are starting to give signals that they're getting prepared to make a move upwards under the right circumstances, especially with what we've seen today. And so what we need to be on the lookout for is that move. And so because of that, and because of the fact that we are seeing some bullishness printing here for your alts, I am capable and willing to do some small dollar cost averages on my major altcoin positions like XRP, Solana, SUI, XLM, HBAR, and many more. Now, outside of that, when it comes to Bitcoin, when it comes to ETH and many of my bigger positions that aren't giving us that bullish divergence, I'm not doing anything. I'm just holding. Why would I make a move right here? I took profits back here. I'm just waiting this bad boy out to see what happens. I do have a lot of profit that I had sitting on the side, and I didn't like the fact that it was sitting on the side. So I will actually show you guys this for the very first time on YouTube, right before the stream. Okay, right before the live stream starts in 10 minutes here. For the very first time on YouTube, I'm going to show you guys what I've been working on since December. Okay, I'm very, very, very much so against getting too personal into my own personal finances and things like that. It's just not something I've ever been very big into. I just think it's a little bit awkward, and I don't want to make anyone feel weird in any capacity, but I do think there's a level of transparency I'd like to get to. And so I would like to start showing you guys some of the moves that I'm making outside of crypto to hopefully give you a bit more of a well understood perspective of what I'm actually doing, not just as a crypto investor, but as an investor in general. So what I have done recently in the month of December is I started up a brand new Robinhood portfolio where I was just going to be buying VOO. If you don't know what VOO is the traditional stock market in many capacities. It's the S&P 500. It's the top 500 biggest companies in the United States, pretty much. And yeah, this is one of the places that I like to park a lot of my cash. One of my strategies is to take profit from the crypto market and put it into the VOO as a like forever fund. Basically, it's just a forever. I'm gonna keep my money here forever. I'll just leave it alone unless I absolutely need it, right? And so in December, I started taking profit off of crypto, and I started moving that profit into the stock market. And here we are. And this is how it's going. For the very first time ever, you guys are going to see a little bit in depth and insight into some of my other things that I'm doing. Now, this isn't where the majority of my stock position is at. I do have a financial advisor who I just let handle everything, but I do like taking some of my portfolio in control. And so I did start this. This is just on my own. It's kind of like a side portfolio that I'm running that I think is kind of fun. But what I did, as you can see, is back in December, I did go in. I started putting some cash into this thing. Over the last 8 or 9 months, I've put in about $200,000 into this portfolio. It did go negative for a while. So I put the money in. I rotated my profit from crypto into the stock market back here. It started off pretty good in February, March, April, May, June, or March, April. Absolutely brutal. I saw the position fall about $20,000 over the course of a couple weeks. I didn't freak out. I didn't care. I continued to just dollar cost average every single day. And obviously that did play out very well. I do currently do a $600 purchase every single day into the stock market. And I've continuously done that, as you can see here, through July, through June, through May. I just do it every day. Just every single day I do it. And I didn't stop it because I was down. I increased it because I was down. I started actually only doing $100 for a while, but then I picked that up to $200 and $300, and now it's at $600. And I do plan on buying more and more and more over time. But what you guys can see is that recently I did rotate a good bit of cash over from my crypto portfolio into my stock portfolio. On July 28th, I bought $7,500 worth of VOO. On July 25th, I bought $20,000 worth of VOO, putting about $37,500 into the stock market, even though we're at highs. And some people may say, Tyler, that's not a good idea. I don't care. At the end of the day, I'm willing to purchase here. And if it goes down, I'll just buy more, just like I did back here, and let this accumulate over time. And to hopefully when I'm in my 40s, 50s, 60s, this can be an 8-figure VOO position or something along those lines. So that is one of the things that I've been doing. Let me know what you guys think. I do feel a little bit odd showing you guys things like this. I don't want you to think by any means that I think this is normal. I know it's not normal. I know it's a lot of money. I know it's a very not the average, but I did kind of want to give you guys just a little peek behind the curtains as to what I do outside the crypto market when I move some profit from crypto. And it's the beautiful thing about it. I took all of this profit off of the world of crypto back here, and I was able to start shuffling some of that into the stock market and, starting to build up this thing. And hopefully, we can get those gains and the dividends will be good. And yeah, we'll keep the ball rolling. So hopefully you guys like that. Again, I feel a little bit odd, but yeah, I just wanted to share that with you guys today. Let me know your thoughts. And I will say these moves today feel weird. Like, it's 0.17%, but it's moving like hundreds of dollars, and it does get a little bit weird to look at. But overall, it has been performing well. The last month has been pretty solid. The last 3 months have been great, up $21,000 in the last 90 days. So Feels pretty good. So overall, that's kind of what I've been doing in the crypto market and outside the crypto market. The only other thing I have been doing is I have been getting involved in some real estate stuff. We do have a 61 plex out in Texas now. I'll tell you guys more about that later on. I don't have time to get into it because the FOMC meeting is starting soon. But yeah, so I'm not just sitting dormant. I'm not just not doing anything. I am actively making moves with the profits that we've been taking, and it does feel good. You know, I was buying Bitcoin at 20K, 19K, and it feels very nice to be able to use those profits for the better and continue to diversify that portfolio out. So all in all, that's where we are. So until then, look, I think that's a great overview of the market. That's how I'm feeling about the market. That's what I'm doing. What we're going to do is we're going to check into the FOMC meeting next, which starts in about 4 minutes. And then I'm going to do some individual analysis on Solana, SUI, XLM, XRP, and much more, kind of give you my individualized perspective on each one of them. So without further ado, what I'm going to do is I'm going to go ahead and just switch this bad boy on over, and I am going to get this thing ready for, let's see, I'm going to get this ready for the live stream from Jerome Powell, our good buddy Jerome Powell, in a few minutes here. So let's go ahead and just get that started. And yeah, I'll just have that ready to go. Check out these comments. Alrighty. All right, I'm curious about what you guys are going to say about this. So I'm very curious. Okay. Manda, $600 a day. Did you hit a 1000x last bull run or something? It's been a big mixture of things. Many people don't know I do have a company. We run one of the biggest KOL relations agencies in all of crypto, and so that has been where a lot of my cash flow does come from, as well as YouTube and investing. All righty. Okay, you guys like it. I don't know. I felt very odd about it, but I'm glad. I'm glad to show it. I like being transparent with you guys. I just don't want to make anyone feel weird. I don't feel like this makes me better than anyone. I just feel like I've gotten lucky and I just worked pretty hard. Okay. Well, the thing about it is, Jay Smith, is they can't target. I mean, there's nothing to target. So like Robinhood, yes, it's on my computer, but to get access to it, you have to go through my financial advisor. I actually can't move anything on Robinhood. Any of my funds, I don't even have my money in crypto on me in my house. I have no access to it, whatever. I don't have anything. And the reason being is because it's obviously a safety risk. And so because of that, if someone wanted something from me, they would literally have to go to my financial advisor. And if you want to try to break into Morgan Stanley, feel free. I can't try to stop you, but like, there's nothing someone could get off of me. I mean, I have a $400 or $50 Aura ring if they want that, but outside of that, there's nothing that someone could get off of me. I don't keep anything in my house. I don't keep anything on me. If I ever need anything, I have to go to the bank. It's annoying, but it's valuable. So I'm not super concerned. There's just nothing that I can't access anything. You know what I mean? So anyway, 12:57. Q&A later. Yeah, I can. We'll definitely do a Q&A towards the end. I appreciate it. I appreciate it, everyone. Alrighty. Try to keep financials private, bro, because YouTube demonetized Kenny. Yeah, it's been a weird situation. I think the people who are getting demonetized are the people who talk about XRP a lot. That's what I've gathered so far. Tyler, so is a way to hodl stocks buying on Robinhood? If so, can I hodl stocks? Yeah, 100%. 100%. My way of doing it is a little bit annoying because I have to call my financial advisor and have him do it from his place, but I think it's worth it. Absolutely, everybody. Yep. So Cade has all of Tyler's crypto because he's his financial advisor. Exactly. Now you're getting it. Alrighty. Really like what you do for the community. I appreciate it. Is it 2:30 or 2 p.m.? I believe it's like 2 minutes. I'm 17 and I started crypto in April. It might not be. Let me see. Oh, it's 2:30. Oh, it's in 30 minutes. Oh, whoopsie. Okay, well, I guess we'll just kind of we'll reshift things. I'll do some technical analysis on crypto first, then we'll go over the live stream. The live stream's in 30 minutes. That's a misread on my part. Economy is good. Don't think the rate cut is coming this year. That is a very strong possibility. And if that is the case, it'll be interesting to see how people handle that with their positions. So I like VOO just because it makes the most sense to me. Biggest 500 companies in the United States. If I bet on the US, I bet on VOO. That's kind of my plan. How much do you spend on a financial advisor? I don't know exactly if I can say that, but it's typically a percentage of what they manage. Okay, it's in 30 minutes. Cool. Do you think we will go higher before the summer low, or will we chop from here over the summer? It's hard to tell, obviously. I honestly have no idea. I think I'd just be giving you a rough guess, and I don't even really have a rough guess. But in a second, I'm going to do a little technical analysis, and hopefully that is something that helps you guys out. Yeah. So whenever it comes to keeping your crypto secure, I mean, the best way to do it is get hard, like you want not hard drives, but I'm trying to, if you probably know what it is, but it's just external wallets, right? You want cold storage and get a ledger, get a tantrum, get whatever, and get multiple of them and put them in different places. So like for me, I have 10, this is going to sound ridiculous, I know, but I have 10 different cold storages set in 10 different places all around, like not even in my, like not even in walking distance of me. It's driving distance of me. And I know it's a lot. I know it's obnoxious, but I do take it very seriously. People do get targeted for their funds, and it's just one of those situations where it's like, listen, if someone targets me, I don't have anything. Like, I don't have access to anything, and I think that's kind of the best thing to do. Really, I mean, I think keeping your money on cold storage out of the grasp of anyone is the best thing that you can do. I like in Washington D.C. has been Jesus, that's crazy. Interest rate decision in 2 minutes. Yep, I think that should have just gone live now. Let me go ahead and give that a look. We should have some information, and I'll jump back into the chat in a second here. Just want to kind of see what's going on here. Latest. Let's do this. Boom. No changes in rates. Okay, that's what we figured. And I don't think the market has any reason to respond weirdly to this. Any moves from this, I would accredit completely to manipulation. Yeah, I mean, the market's not really doing anything, which it should, like, everyone knew that. Like, this is actually just stupid, what we're saying right here. Don't get drawn into this. I think all 100x plus leverage trades should be closed down right now. Let whatever bullshit's going to happen, and then we'll just, like, in 1 hour, I think the market will respond correctly to this. The Fed didn't cut rates. Everyone knew they wouldn't cut rates. No one cares. Yeah. Okay, cool. Good. So, and that's kind of the thing, right? So everyone knew that they weren't going to cut rates today. I mean, they have absolutely no reason to cut rates today, in my opinion. The economy is showing us some pretty solid strength. And while they are waiting out the tariff situation, there isn't really a need for them to make any big changes. One of the biggest pieces of news that I did talk about on Instagram and TikTok earlier today, but I do want to talk about a little bit here, is the fact that we did get advanced GDP coming in this morning, actually really good. So what you guys can see is that quarter-on-quarter advanced GDP was forecasted to come in at 2.5% and actually came in at 3%. Now, what this means is that the general economic health of the United States is in a better position than most people and most analysts thought. So most analysts expected that the GDP of the United States, which again, the easiest way to think about it is just if the US is acting as a business, how healthy is that business, right? They thought that it would grow quarter over quarter by 2.5%, but instead it grew by 3%, which is obviously significantly better. I think 25%, but I think 20% better than analysts were expecting. And so what this means is that the economy is moving in a much better position. And while everyone's been freaking out and worried that tariffs and this and that were going to put a big strain on the economy, it's actually starting to show a bit of the opposite, that many of these things are having somewhat positive impacts on the economy. Now, mind you, there are negatives to what we're seeing in the economy right now, and not everything is great. But when you do look at the current situation, you look at the big, beautiful bill, you look at all of these things, it does go to show that the short-term status of the United States economy is not in as bad of a place as I think many people expected it to be. And that's obviously a good thing for the average person. Now, you would automatically assume that this would be very good for the crypto market, but there is actually a world in which the U.S. economy being in a very good place is actually not a great thing. Now, the reason why I say that, and the reason why the market's been a bit iffy about this decision and shaken up, as you can see from the title, is because many people are relying on interest rate cuts at the end of this year to inject liquidity into the economy, which would then, of course, result in gains in the crypto market. A lot of people are buying Bitcoin, altcoins, stocks, even real estate, because they do believe that we're going to enter into a quantitative easing environment towards the last 3 or 4 months of the year. Now, historically speaking, this is an accurate assumption because in situations like this, the Fed does generally cut rates once they feel like their job is done, especially with inflation. But the problem is that if the United States economy is in a good spot, and if it's not showing any signs of weakness or instability, the Fed may say, why would we change anything right now, especially while there are conflicts and political interests that are being misaligned and aligned in, the government? Why would we change interest rates? Why would we change anything if the US is in a good spot? And if that is the approach that they take, obviously those investors who are buying the rumor would then sell that news because there'd be a bit of a disappointment and it could delay the injection of liquidity that many of them are expecting. So there's a good and a bad to it. From one perspective, the United States economy is in a healthy spot, which is obviously just good for the normal average person, in my opinion. But obviously, if they are not going to cut rates because it's in a good spot, that could be negative for investors who are speculating on that injection of liquidity. So it's a little bit of a weird back and forth. There's a little bit of like push and pull with that, but it is just kind of the game that we play. But overall, I don't particularly believe that crypto market will rely on interest rates being cut in order to rally, because it has rallied without interest rates being cut. Now, would it help? Of course it would help. But do we need it? I don't think so. I just think interest rates being cut will amplify the gains that are very likely going to happen anyway. Now, again, I guess there's a world where the crypto market just falls throughout the last half of the year and we don't see any gains in October, November, December. It's possible. I just don't think it's super likely. And I think all of these things being combined make it to where even if it's not October, November, December, it would be like right after that, right? So with that in mind, that's kind of the thoughts that I have about obviously the rate cut. And again, I don't think the rate cut's all that important. We knew that the interest rates wouldn't be cut today. What really matters is how Jerome Powell speaks about September. If he starts to imply that we might see rates getting cut, I think the market's going to like it. If he implies that there's no read or there's no need to cut rates in September, I think the market's going to absolutely fall off a cliff. Granny's getting just sucker punched back of the head straight down the stairs, and that wouldn't be good, obviously. I don't think the market would like that very much. So it'll be very interesting to see what happens in about 25 minutes on that FOMC meeting. But in the meantime, look at this absolute bullshit. We got the spinny top going on here. Again, do not get involved with this. I told you just now, don't get involved with this. This is going to be a bunch of BS. You're going to see those liquidations. And look, I mean, if you don't think this is stupid, I don't know what to say. Like, it's just a weird move. It's a dumb move. The market doesn't even need to be doing this. The only reason the market's moving like this is solely just because people just want to do things. And yeah, I would assume there's a good bit of manipulation happening in here. These forced wicks upwards and downwards. What you can see is we just went above $118,000. So it feels to me as if this was a liquidation. And then it seems to me as if that 117,500 level was a key point of liquidation as well. So we probably just liquidated these people to the top side, liquidated these people to the bottom side, and reverted back to the original area. Because the funny thing is that if you look at the structure of this move, we are back within the structure. So if you look at this, and you bring it down, we're just back in the structure. Like, it's just dumb. So we liquidated everyone there. Then we just went back to doing what we were doing before. Like, absolutely stupid. And that's why we don't get involved. There's just no need to play the game. There's no need to play with the bullshit. It's just going to waste you time. I do still believe that it is very possible that this crypto market does start trying to give us some gainers, especially because, again, like you look at the 1 hour RSI here for something like XRP and just look at that bullish divergence. It's clear as day. I almost said blind as day. It's clear as day. Higher lows, lower lows. I don't see a reason as to why we can't start seeing some gains at some point soon, especially when you consider for XRP that it actually is at a key golden Fibonacci zone in the micro sense. Like, look at this. It came back down to the short term. There we go. Came back down, low, high, started to go back down and retrace, came back to the golden zone, put bullish divergence in, trying to make its way upwards. Like, even if it does lose the golden zone, coming back down towards, say, the 295 level should give it some room for some growth. So all these things, like the altcoin market just feels to me as if this is literally just a cool down and a correction that's going to be followed by a support establishment and some sort of try to push upwards. And that is like exactly what I expect this market to do. So I'm not even all that concerned by what we're seeing here in crypto. Like, it just doesn't particularly matter, to be honest. Let's see here. What's the stock market doing? That's nice. But yeah, so I mean, it's just, yeah, I mean, like, this is, I don't know. It just feels like nonsense to me. And at the end of the day, too, like, if you want to know, hey, when is crypto actually going to pump? Like I've told you before, crypto will not pump until Bitcoin breaks out of this. Oh, there was a super chat earlier I didn't answer, didn't I? Chris Klaus, sweet technical analysis. Thanks, bro. Absolutely, Chris. Much appreciated for the $5 donation. And I absolutely going to do some sweet technical analysis in a bit here. Also, much appreciated to you, homie. I'm going to give it a try at ARP Fun. All right, fine. That's what I'm going with. Hi, I'm new to the crypto space. What's the best cold wallet you recommend to keep your XRP? Just use a ledger. Just use a ledger. It's very easy. Okay. So yeah, if you want to see when the crypto market's going to really pump, it's going to be when Bitcoin breaks out of this descending channel. Like, this is all that matters. It's going to be the determining factor of when this happens. And the reason that I say that is because Bitcoin has started to regain control of this market. Look at altcoin season, for example. Do you see how we were getting closer and closer towards altcoin season, but now we've corrected over 33% back towards the 41% threshold, nearly back in the yellow range of Bitcoin season? What it means is that Bitcoin has recaptured some control of this market. When Bitcoin's up, the crypto market should be up. When Bitcoin's down, the crypto market is down. And what you can see is that Bitcoin's stuck in a descending channel. So what do we need to do? Well, we need to wait for Bitcoin to break it. When Bitcoin breaks this, it'll open up the door for, of course, the alts to start to run. And that makes a lot of sense, right? It's like a little a mini cycle just happened. We saw Bitcoin run, right? We saw Bitcoin run. Everyone got excited. They started pouring their money into altcoins. As a result, Bitcoin slowed down. During this little time frame, altcoins started to go up. Then this little time frame right here, meme coins like Pingu started to go up. And then people started investing into pre-sales. And then now over the last couple of days, all of them have pulled back. It makes perfect sense. We saw a microcycle happen that was led by Bitcoin, that flowed into alts, then everything pulled back, now goes back to Bitcoin. So if the market's going to pump, you're going to be looking for Bitcoin's price to break out of this descending channel. I believe that is all that truthfully matters. Like, I wouldn't be opening up any big long trades, any big leverage buys, anything like that until Bitcoin's not consistently sat behind a macro point of resistance, because now we have 1, 2, 3 confirmations of resistance right here, which makes it clear as day that this is exactly the structure to be paying attention to. Now, if you do want to do some trading, if you want to range trade, there is an opportunity for you to range trade here based on the actual descending structure itself. So one of my favorite things to do whenever I am range trading is I'll usually set it up like this. Give me a second. So I'll do this, and then I'll do this. Make sure this is all aligned. Very nice. And then I'll do this, and then I'll make it brighter. And what I'll say is, okay, if I'm going to range trade Bitcoin, what I'm going to do is I'm going to be doing my first buys, right? So I'm going to have my entries set below this 50% threshold. So it's right here, 100, then 50, then 0, okay? I'm going to the 50% threshold, and anything below here, I'm willing to do my longs on. So I'll open up a long trade. The lower down into this you go, the closer to 0 you get, the better it is, right? So again, 100, 50, 0. The lower and closer to 0, which is right here, that you get, the better. And what I'll do is I'll open up these long trades whenever we hit this bright green box, and then I'll use it as an opportunity to either DCA or, again, just open up that leverage long. I have a stop loss set with enough reasonable range between this and, of course, the descending portion of the channel. Some softwares that I use do have descending stop losses, which is very cool, which means you can set like a line that looks like this. And you'll say, this is my stop loss. Very nice. And then what I'll do is I'll just say, okay, open up the long trade here, stop loss set down here, take profit first whenever we hit the 50. The next one is when we hit the 100. And I'll just do it over and over and over again. And so what you can see is that had you done a small one here, you won. You done a big one here, you won. A big one here, you won. A big one here, you won. Over and over and over again, right? This is the exact model that we used for our DCAs in the last previous structure that we were in. And it worked pretty well, right? I mean, you guys can see it here. We went in, we took some profits towards the top side. We bought in at the 50, we bought in at the 25, we bought in right there around the 13. And then we did the buying there. I missed the take profit right here because I was out at a conference. Came back down, did another purchase here, took profits whenever we hit the top side, and then we broke out and I took a lot more profits off the table. So range trading these things is generally pretty damn easy, I'm going to be honest. You just got to follow the structure and just be aware. Like, the structure will break eventually, so it's not going to last forever. Like, you only have a couple opportunities, maybe at best one more within this one before the structure breaks. So don't go all in on it, but it is usually a pretty good opportunity. And I will let you guys know, if you are doing some trading, you can use my link to BTCC down below. Guys, if you do sign up specifically with my link to BTCC, you're going to get up to $10,000 in bonuses to every single person who's watching this stream right now. So each one of you can get up to $10,000 in bonuses. I explained all the perks right here, and you can see a little bit more about the exchange in this video where I'll walk you through it. So that link's down there. I do the vast majority of my trading over on BTCC. I think you will enjoy it, so feel free to go check that out. And while we are on the topic, one other thing I do want to let you know is that if at any given point I'm doing technical analysis or fundamental analysis today, and it all just starts to feel a little little bit confusing, like zones, resistance, support, whatever, what I encourage you to do is check out the crypto playbook. It's down below. It's completely for free. I would never charge you guys for the crypto playbook. You can have it for free forever. That's my agreement with you. And what it is a ginormous document just full of information about how crypto works. So, for example, today we've talked a lot about the Bollinger Bands. What you can go do is you can click the Bollinger Bands over on the crypto playbook, and you can actually click this right here, watch this little Loom video, and it's like a 15, 20-minute video that explains how the Bollinger Band works. And I took the notes for you. So I just took notes for it for you, and you can click this video, and it does the same. And we have one for the RSI, the fibs, what is crypto market structure, 4-year cycles. I mean, like as much as you can think of, it's all available for you. Again, it is completely for free. I will not ever charge you for the playbook, and I want you to hold me accountable for that. It's a free resource you can use forever. I hope you guys do enjoy it. So that's kind of where we are with that. Yeah, and this is what determines. I mean, this is what I'm watching. Bitcoin will decide when the market's ready to run. Until then, it's not going to run. Simple as, okay? Matthew, got any tips for a 17-year-old with a low four-figure portfolio? A couple tips for you, Matt. Don't invest in anything risky trying to turn your $2,000 portfolio into a $10,000 portfolio. The reason why I tell you that is you're much more likely to be able to grow from a $2,000 portfolio to a $10,000 portfolio by time in the market, consistency by just buying consistently over certain periods of time, and prioritize putting that same amount of emotion and energy that you're putting into trying to find this one crypto that'll blow up, put it into just trying to make more income. I know it's stupid and I know it's annoying to say, but trust me when I tell you, you will make infinitely more money by just trying to figure out ways to make more money than trying to invest and turn your investments into more money. A 3x on a $2,000 portfolio puts you at $6,000. And sure, that's great. But the truth is you can learn how to make $4,000 much easier, much faster, and you can replicate that much easier than a crypto portfolio can. So my honest opinion is be consistent, invest in a very safe/mid-safe things at your age, and prioritize skills that will make you more money. Whether you're flipping things, whether you're selling things, whether you're apprenticing somewhere and making just a little bit of money, just try to learn more skills. I promise you it will pay off more than any of these cryptos that you'll find, because 1 out of 100 cryptos will turn that $2,000 portfolio to a $25,000 portfolio. You have a much better chance than 1% and making that same amount of money if you just put a year into trying to just figure out ways to make more income. So trust me, that's what I did at 15 years old. At 15 years old, I went on a journey to try to make more money. And what I've realized over the last 9 years now is every time I invest my time into trying to make more money, I make more money. When I try to chase investments to double my money, I almost always lose. I might as well just go play blackjack. So hopefully, of course, that is beneficial to you. Okay. When can we open new long trades? I'm personally not under the expectation that this is a good time to open long trades. The reason why I don't think it's a great time to open long trades is because we're in the danger zone for Bitcoin. Bitcoin is sitting between the 50 and the 100 right now. This black zone is the no trade zone for me. I don't like shorting during bull markets, which is what we're in right now. This is a bull market. I don't like shorting in a bull market, and I don't like longing in the black zone. So what I would do is wait for us to be in the dark green zone, ideally the bright green zone, or when we break through the top side of this and open up that door of opportunity upwards. But while we're in the black zone, this is going to happen over and over and over again. So long trades are extremely risky right now. That's why I wanted Tyler's perspective on where he stores it to trade, because he might have a lot of money. When I need to trade, I have to go get it and then use it and then go put it back. It's annoying, but it's worth it. It's worth the safety. Should I be trimming my unrealized gains? I always think it's a good idea to take profits, and I'll never, ever try to convince you not to. We can open low leverage swing trades, right? SWI XRP, which had a good correction. Yeah, I mean, if you want to do some low leverage swing trades on XRP, SWI, I don't think it's a bad idea, especially considering the bullish divergences we are seeing on the RSI. It's just a risky game to be playing, because if Bitcoin nukes out of this black zone down to the green zone, now you have a good buying opportunity, but you might have longed right here, then rode that down. Now you don't have the capital to deploy in the actual good time to get in. So going in right now is possible. Sure, it's not a terrible idea, but it is a bit of a risky one. The other thing I will say is that, Total 2's teetering on a weird edge right now, where this is clearly a double top, right? And if it comes back down and say loses this key support, that's going to open up, like all hell's going to probably break loose for altcoins. You're probably going to see them really nuke a little bit if it loses that support. So going long right now is not the worst idea for the ones showing bullish divergence. You just need to be incredibly careful, because if Total 2 loses this, if it can't use this golden zone to hold and continue upwards, things are going to get ugly, and you just have to be ready for that. Okay. I'm 24. Just saying personally, I don't like to keep more than 30K on one platform at a time, 100%. What do you think about Trump's tweet earlier today about, I didn't see it actually, I'll go look. Does anyone have thoughts about Crow? Not many. Check out Oscar Ramos. He talks about him a lot. What about other coins worth longing? I think they all fall into the same category of what I just spoke about. I bought XRP at $2 and SWI at $2.05. Should I take profits and wait for it to go up to buy again or keep the position? Why not just skim some profits off the table? You don't have to, it's not binary. You don't have to buy it all or sell it all. You don't have to make such a ginormous move. Skim a little bit of profits on the table, reward yourself, put some money aside for taxes, put a little bit of money aside to go have fun. Take some crypto, take some of that profit that you had and put it in a spot where you'll keep it until you want to reinvest it on a red day. Why not take an approach like that? And I'm not telling you what to do. I can't guarantee any returns. I'm not a financial advisor. I'm not Kate O'Neill. But what you can do is you can stop looking at it from a binary perspective and start looking at it from a multi-dimensional perspective, or in that you can make a whole bunch of different things happen. You don't have to just buy everything or sell everything at once. So you disagree with Trump's position on the FFS rate. What do you think? I don't know. Big cap alts like Sol, XRP already took out many highs. When is it time to rotate to small cap? It's a fantastic point. Getting some exposure to small caps now isn't a terrible idea. I mean, you guys know that I do have some exposure to small caps myself already. For example, some of the ones that I have done some buying of are Simple AI. That one's pulled back a little bit, but I'm fine with it. Epic on Chain is another smaller one. Tars AI is another small one. Qubit, one of my favorites. Quantum computing niche, which I don't think people are tapping into. That's one of my favorite ones. So I do have some exposure to small caps. I just don't like to prioritize them because I just don't feel like it's the time to. All of you new people, make sure to like the stream, spam the like button. I appreciate it. That's a great point. I always forget to ask you guys to do that. But if you do want to go in and smash that like button, that would be much, much, much appreciated. Just hit it with a little right hook on the chin. Tell them Tyler sent you. Another thing I do want to let you guys know, guys, is I do have an Instagram. I talk about it every now and then here on the channel. But over on Instagram, I try 5 to 10 videos every single day, going over things like Bitcoin, Solana, Doge, XRP, XLM, the news, Pepe, anything that I can think of, right? And we're doing pretty good. Shout out to all of you who have followed it. We have 1,500 followers. I started this like a couple months ago or so. So feel free to go follow that if that is something that does interest you. That is down below. I was up about 30% on my portfolio last week, but I wrote it out and it's riding break even. That's why you got to take a little bit of profit off the table. When you're out playing that, take a little profit, just a little bit, so you feel good about yourself. Brillo in the building, one of my favorite YouTube subscribers. What's up, homie? Jason, you're the king of the notification squad. President Trump says he heard Fed Jerome Powell will cut interest rates in September. Hopefully, that'd be an ideal scenario here, but I guess we'll see. I'm catching up, but I can appreciate it. What these guys miss is that's one of your side accounts. Yeah, exactly. Do you think the tariff deadline on August 1st between us and Canada will affect crypto? Not really. I think people are getting sick of it, to be honest. That is a crazy spam. Yo. That's a crazy spam. Sorry, brother. Okay. Thank you for being honest and well articulated with your insight. The market is really tough to get in and out of at the right time, especially when the jumpy, dumpy small caps. Agreed, and I appreciate that. I try my best, homie. We'll check out SWI in a little while here. We are getting the live stream started in about 8 minutes, so I'm curious to what old Powie is going to say. Do you think gaming narrative has a chance to bull run? I definitely thought so. I thought that gaming was going to be around this day, but it's definitely underperforming and not showing the signs of life that I hoped it would. I don't care which way we swing. I just want us to go somewhere. I feel that. Stein R. What's up, dude? Welcome back. Stein R. Another president of the Notification Club in the building. What's up, homie? Please analyze your favorite pizza topping. It's pizza and it's pepperoni and it's only pepperoni. Pepperoni, a little hot honey, dip it in ranch, call it a day. Don't be a weirdo. All right. By far my favorite channel. Much appreciated, LD. Happy to have you, homie. Am I blocked to ask about XLM? Yeah, we'll check it out in a little bit here. Miss you when you don't make videos. I try to get them out every day for you, but busy some days. Shout out, everybody. We're just going to do a little Q&A action for the next 6 minutes until the FOMC meeting, I think. Then we'll end it off by doing some individual analysis on some of our favorite alts. Probably another Q&A. We'll call it a day. Probably about a 2-hour stream here, so lock in. Go get you some water. Because you guys know if you don't drink water, I ban you from the chat with absolute no mercy. What if I did some long before and now I'm even with my trade? Should I close them as I don't have any profit or loss? If you're questioning whether you should close your long trades, you probably should. I dip my pizza in ranch. I don't put ranch on my pizza. Thank you very much. No jalapenos on the side. I'm not a spicy guy, dude. I'm not a spicy guy. Spicy foods tear my ass up. That didn't come out as I hoped it would. Anyway, Italians rolling in their graves. Good. Tyler, what's the platform that you would recommend trading spot that is safe but low fees for someone that wants to trade with 200K? I like BTCC. BTCC is a great option. It's where I do most of my trading, and I do trade in the six-figure range generally. So, I mean, I do have the link down below. I am, shamelessly shilling the link. But yeah, it's available down there for you if you want it. Do we get the photo on the chair and knee exposure? Haven't seen that one in a while. Stay tuned. Yeah, we'll check out Bonk in a little while. Yep. Did you actually get your DXP in your wallet? Yeah, I believe so. Even my 17-year-old son is addicted to your IG Reels. Well, great. I'm glad he likes them. That means I'm doing something right. If the 17-year-olds like it, you got to be doing something right. Ever tried curry chicken and banana on your pizza? It's kind of normal where I live. No. Give us Tyler's best movie of the year. Sinners. 100%. Not even close. Stay hydrated and get liquidated. Exactly. You get it. I know. Yeah, I know. That one didn't come out right. Hey, brother, this might be a little off topic, but I've seen some of your past MMA fights, and I like them. What made you stop, if you don't mind me asking? Well, your boy blew his shoulder up. Let me see if we got time. Yeah. Your boy blew his shoulder up, as you can see. Some of you guys have probably noticed the scars and stuff that go all around my shoulder, as you can see. Your boy blew his shoulder up last summer. Maybe about a year and a half ago. I had a fight. The last punch that I threw of the fight before the ref stepped in and stopped it, I basically just blew my shoulder to pieces. So because of that, I made the decision like, hey, I'm kind of just getting tired of taking injuries. It sucked, and it kind of hurt to walk away. I was at the time #1 in the state, but it gets old. The injuries get old, and I have a wife now. I want to have kids pretty soon here, so I gotta prioritize my health. I'll probably still do some kickboxing stuff every now and then, but for MMA, I am all tapped out. Yeah, maybe 15 minutes. Are you open to collabs with traditional investment channels? Also, do you have a favorite public company? My favorite, this is going to sound cringy, but my favorite public company is Apple because I'm an Apple fiend. And yeah, I'm definitely open to doing some stuff like that. It has to make sense, of course. Shout out FYN Advisors. It's been a long time. All righty. What time is Glenn coming on? You aren't supposed to do that, right? Yeah, I know. How many times have you blown up your accounts before finally being successful? I've actually never blown up an account before, and that is because when I started trading in crypto, I took the same approach as I do with fighting. So when I started trading crypto, I was also fighting at the time, and I always knew what made me good at fighting is I cared about defense more than offense. So I cared about protecting myself more than I cared about actually hurting someone else. And it sounds dumb, but it works. So I applied that same logic to my trading career, and that is why I never really blew up any accounts, because I always had my risk management on point from the very beginning. Now, I've lost a good bit of money, don't get me wrong, and I'm not the best trader in the world, guys. I'm not going to sit here and pretend like I'm not the best trader in the world. I've lost a lot of money. I've made a lot of money. I've made more than I've lost, but at the end of the day, the most money I've made is buying, holding, and not doing anything else. So, how old are you, if you don't mind me asking? I'm 24 years old. Do you watch anime? No, I'm not a big anime guy, but I did like the Spider-Man animated one. I have an iPhone 7S. What should I upgrade to, Mr. Apple? The newest phone, and get off an iPhone 7S. Do you think there will be some big economic crash coming soon? Not really, personally. What do we do if Bitcoin breaks below the range it's in right now? I'll tell you about it. You ever never thought about launching your own coin, meme coin? I think it's almost impossible to launch a coin, like a meme coin, and not end up kind of scamming people. So, not my thing. I do have some Solixy. Yep. Tyler's got #1, brother. You're a beast for formula across the board, man. I appreciate it. Yeah, I climbed up to the #1 spot in Louisiana. I was number 12 in the Southern United States. Then I went pro. I won my first pro fight, blew up my shoulder, hung up the glove. All right, I think we're all right. I appreciate that. I definitely do take pride in my analysis. I'm not a super big trader. Sorry, I did not catch that. What made you the most money? Buying, holding, and not doing anything else. Alrighty. Hey, it says, can you please explain how resistance and support works? Yeah, well, guess what? Head over to the link down below, go download the playbook for free, and there is a section right over here where we talk about that in the technical analysis section. It's right here. Feel free to go check that out. All right, friends, let's go ahead and let's jump over to the stream. Let's kind of see what's going on here. And if you're liking the stream, 2 things, please do let me know in the chat if you've been enjoying it. I haven't done a lot of streaming recently, so please let me know if you want me to do more of these. And secondly, let me know by smashing the like button. It'd be much appreciated. Stream should start in 1 minute. Shout out to you guys. Having a good time. We've been on for an hour. Crazy, crazy, crazy. Since you're good at fighting, can you catch the fade? No, I don't want to fight you, man. I don't like fighting anyone. Nothing to prove. I was promised wedding pics. Where they at? Check out the Instagram. I got some on Instagram. Because people hate me. They just don't say it. I'm just joking. The playbook was the best move ever because we do ask too many questions. They all be the same ones. No, it's totally fine. Enjoy these streams a lot. Quality time. We love your honesty and professionalism. Cool. Love the stream. Cool. Very good. Very nice. Shout out to you, Will. Cool. What's your favorite martial arts besides MMA? Definitely Muay Thai. I'm a big Muay Thai guy. Just don't really like grappling all that much. I like punching stuff. I used to, at least. What city are you from? I used to live in a city called Berwick, Louisiana, a long time ago. Do you think there will be a big economic crash eventually in Q4, Q1, kind of like a bubble popped event? Possibly. Oh, here we go. All right, we got to go. Let's jump into this. Let me turn the sound on. Are y'all ready for bro to say we need more data 1 million times over the next 20 minutes? Hey, could y'all hear that music just now? Hey, could y'all hear that music? Shout out to you, Will. Cool. What's your favorite martial art? You could hear it. Okay. Yeah, so I know he's not going to cut rates, but what's important is whether or not he speaks about September and stuff. That walk is crazy. All right, let's go.
Good afternoon.
Let me know if y'all can hear it real quick.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Despite elevated uncertainty, the economy is in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has been running somewhat above our 2% longer run objective. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a 1.2% pace in the first half of this year, down from 2.5% last year. Although the increase in the second quarter was stronger at 3%, focusing on the first half of the year helps smooth through the volatility in the quarterly figures related to the unusual swings in net exports. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles picked up from last year's pace. Activity in the housing sector remains weak. In the labor market, conditions have remained solid. Payroll job gains averaged 150,000 per month over the past 3 months. The unemployment rate at 4.1% remains low and has stayed in a narrow range over the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance and consistent with maximum employment. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in June, and that, excluding the volatile food and energy categories, core PCE prices rose 2.7%. These readings are little changed from the beginning of the year, although the underlying composition of price changes has shifted. Services inflation has continued to ease, while increased tariffs are pushing up prices in some categories of goods. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market-based and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%, and to continue reducing the size of our balance sheet. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to show through more clearly to prices of some goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation could be short-lived, reflecting a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. For the time being, we're well positioned to learn more about the likely course of the economy and the evolving balance of risks before adjusting our policy stance. We see our current policy stance as appropriate to guard against inflation risks. We're also attentive to risks on the employment side of our mandate. In coming months, we will receive a good amount of data that will help inform our assessment of the balance of risks and the appropriate setting of the federal funds rate. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on potential revisions to our statement on longer-run goals and monetary policy strategy, and are on track to wrap up any modifications by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thanks, Chair Powell. There's a lot of lean in the markets, and not to mention out of the administration for a rate cut now in September. Is that expectation unrealistic at this point?
So, as you know, today we decided to leave our policy rate where it's been, where I would characterize as modestly restrictive. Inflation is running a bit above 2%, as I mentioned, even excluding tariff effects. The labor market's solid, historically low unemployment. Financial conditions are accommodative, and the economy is not performing as though restrictive policy were holding it back inappropriately. So it seems to me and to almost the whole committee that the economy is not performing as though restrictive policy is holding it back inappropriately, and modestly restrictive policy seems appropriate. All that said, there's also downside risk to the labor market. In coming months, we'll receive a good amount of data that will help inform our assessment of the balance of risks and the appropriate setting of the federal funds rate.
So just to follow
Mark is
up,
not going to like that.
coming months, does that include the possibility you'll be getting essentially 2 rounds of jobs and inflation data between now and the September meeting? Is that potentially adequate to make a decision to lower rates at that point?
So you're right. We do have, this is an intermeeting period when we'll get 2 full rounds of employment and inflation data before the time of the September meeting. We have made no decisions about September. We don't do that in advance. We'll be taking that information into consideration and all the other information we get as we make our decision at the September meeting.
I will say, bro actually answered a question for the first time in the 98,000 years he's been alive.
Thank you, Mr. Chairman. You took out the word or the notion that uncertainty has diminished from this statement. Does that mean uncertainty has increased? And I'm just wondering, the administration has struck several deals with large trading partners where it seems like we now know what the rate is going to be. Does knowing that rate add to your certainty to change policy, or do you need to wait to see the economic effects?
So essentially, the statement in our statement about uncertainty reflects what's gone on since the last meeting. So at the time of the last meeting, uncertainty had moved down a little bit, but it was more or less even this time. So we took out, had diminished because it didn't diminish further. So there's not really much in that. And then your second question is, say again?
There have been several deals that have been struck, and now we seem to have an idea of what the tariff rates are going to be with some of our large trading partners. Does that not add to the kind of certainty you might need, or is it you're waiting for the economic
Yes,
effects
it should, because that's what he
themselves?
said.
No, I think we're still, you're right, it's been a very dynamic time for these trade negotiations, and lots and lots of events in the intermeeting period, but we're still a ways away from seeing where things settle down. We are clearly getting more and more information, and I think at this point, people's estimates, our estimates, outside estimates of the likely effective level of tariffs is not moving around that much at this point. But at the same time, there are many uncertainties left to resolve. So yes, we are learning more and more. It doesn't feel like we're very close to the end of that process, and that's not for us to judge. But it feels like there's much more to come, as well, looking ahead.
Neil.
Hi, Mr. Chairman. Neil Irwin with Axios. This morning we got a GDP report in which final domestic private purchases decelerated, slowest pace since 22. There was a weakness in the interest-sensitive sectors and residential investment, commercial structures. Are those not signs that monetary policy is a little too restrictive right now,
Yes,
given current economic
Neil,
conditions?
yes.
So the GDP and PDFP numbers came in pretty much right where we expected them to come in. You got to look at the whole picture. So certainly, as I mentioned in my opening remarks, economic activity data, GDP, private domestic final purchases, which we think is a narrower but better signal for future, for where the economy is going, has come down to a little better than 1%, 1.2%, I think, in the case of GDP for the first half, whereas it was 2.5% last year. So that has certainly come down. But if you look at the labor market, what you see is, by many, many statistics, the labor market is kind of still in balance. It's things like quits, job openings, and let alone the unemployment rate. They're all by many measures, very similar to where they were a year ago. So you do not see weakening in the labor market. You do see a slowing in job creation, but also a slowing in the supply of workers. So you've got a labor market that's in balance, albeit partially because both demand and supply for workers is coming down at the same pace, and that's why the unemployment rate has remained roughly stable, which is why I said we do see downside risk in the labor market. I mean, our two mandate variables, right, are inflation and maximum employment, stable prices and maximum employment, not so much growth. So the labor market looks solid. Inflation is above target, and even if you look through the tariff effects, we think it's still a bit above target, and that's why our stance is where it is. But as I mentioned, downside risks to the labor market are certainly apparent.
So on labor, given the fluid labor supply situation, is there a number for this jobs report we get on Friday that would look to you like equilibrium job growth?
The main number you have to look at now is the unemployment rate, because it's true that the demand for workers in the form of, let's call it, just say payroll jobs, that number has come down, but so has the break-even number, kind of in tandem. So, as long as that puts the labor market in balance, the fact that it's getting into balance due to declines in both supply and demand, though, I think it is suggestive of downside risk. So we of course, will be watching that carefully.
Thank you. Colby Smith with the New York Times. Two of your colleagues called for a quarter-point cut today, and I'm wondering what aspects of their argument were most compelling to you and how you're weighing their views against those on the committee who, as of the June forecast, were in the camp of the Fed holding interest rates steady for the remainder of the year. And just in terms of the June SEP in particular, is that still the best representation of where the core of the committee is?
So on the dissents, what you want from everybody and also from a dissenter is a clear explanation of what your thinking is and what are the arguments you're making, and we had that today. So I think basically this was quite a good meeting all around the table where people were thought carefully about this and put their positions out there. As I mentioned, the sort of the majority of the committee was of the view that inflation's a bit above target, maximum employment is at target. That calls for modestly restrictive, in my way of thinking, modestly restrictive stance of policy for now. But we had two dissenters who I think, you want that clear thinking and expression of your thinking, and we certainly had that today, I think all around the table. In terms of, you asked about the June SEP, I wouldn't, that you're right, that's what it says, and that may well, I couldn't point to it 6 weeks later as expressing people's thought. You really can't do that. We don't run an SEP, and I don't like to substitute in my own estimate of what the SEP might be. We don't have one. So I'll just say that, we haven't made any decisions about September monitoring.
Being only modestly restrictive, does that mean that there's actually not much scope to reduce rates once the conditions for a cut are met, barring a significant weakening of the labor market?
So let me say, my own estimate is modestly restrictive, and there are a range of views of what the neutral rate is at this moment for our economy, and so others may say it's more restrictive or less restrictive even. We're going to be, at some point, when we return to moving toward a more neutral stance, we'll be making that judgment as we go. I don't think we have a preset course. It's not so mechanical as saying, we've derived with great confidence the neutral rate, and that is our destination, because really we understand that no one actually knows what the neutral rate is. We know it by its works, and that will be how the way the economy reacts over time to, slightly looser policy.
Nick Timmeros, The Wall Street Journal. Chair Powell, my question is about what have you learned over the last few months about the inflation generating and price pass-through process? And just to drill down, the June CPI report showed evidence of tariff-induced goods inflation. Now, the tariff landscape is only starting to be settled with some of these more recent deals. Given the lags between when tariffs are announced and when they show up in goods prices, is 2 months a long enough horizon to evaluate the impact and be confident that tariffs aren't impacting the broader inflation process?
I think you have to think of this as still quite early days. And so I think what we're seeing now is substantial amounts of tariff revenue being collected on the order of $30 billion a month, which is, substantially higher than before. And the evidence seems to be mostly not paid only to a small extent through exporters lowering their price, and companies or retailers, sort of people who are upstream, institutions that are upstream from the consumer, are paying most of this for now. Consumers it's starting to show up in consumer prices, as you know, in the June report. We expect to see more of that. And we know from surveys that companies feel that they have every intention of putting this through to the consumer, but the truth is they may not be able to in many cases. So I think we're just going to have to watch and learn empirically how much of this and over what period of time. I think we've learned that the process will probably be slower than expected at the beginning, but we never expected it to be fast. We think we have a long way to go to really understand exactly how it will be. So that's how we're thinking of it right now.
So if I could follow up, is the reticence to look through core goods inflation being driven by the judgment that during the pandemic expectations proved more adaptive than anyone at the Fed expected? Is it being driven by uncertainty over how restrictive policy is?
You could argue we are a bit looking through goods inflation by not raising rates. We haven't reacted to new inflation, but I mean, I wouldn't insist upon that. But I don't think, I think the base case, as I said, a reasonable base case is that these are one-time price effects. Of course, in the end, there will not be. This will not turn out to be inflation, because we'll make sure that it's not. We will, through our tools, make sure that this does not move from being a one-time price increase to serious inflation. We want to do that efficiently, though, and that means we want to do it. If you move too soon, you wind up maybe not getting inflation all the way fixed, and you have to come back. That's inefficient. If you move too late, you might do unnecessary damage to the labor market. So There won't be in the end a big inflationary problem. What we're trying to do is accomplish that in a way that is efficient. But in the end, there should be no doubt that we will do what we need to do to keep inflation under control. Ideally, we do it efficiently.
Michael McKee from Bloomberg Television and Radio. The one big bill, leaving aside the adjectives, do you expect it to add stimulus to the economy in 2026? And would that be an argument for remaining on hold or cutting back on the number of rate cuts you would expect for next year?
So, of course, let me just ritual disclaimer that we don't express any judgments or anything like that on fiscal legislation or other legislation for that matter. But I would say, when you think
Whatever,
that,
bro.
you know, the biggest part of the bill was making permanent existing law on taxes. I don't think we see it as particularly stimulative. There should be some stimulative effect, but it shouldn't be significant over the next couple of years.
And to follow up, what do you, well, I don't want to put this in terms of you and the president, so let me ask it this way. Do you have concerns about the cost of keeping rates elevated for longer in terms of interest rate charges?
Yeah, no, that's, you know, we have a mandate, and that's maximum employment and price stability. And it is, it's not something we do to consider the cost to the government of our rate changes. We have to be able to look at the goal variables Congress has given us, use the tools they've given us to achieve those goals, and that's what we do. We don't consider the fiscal needs of the federal government. No advanced economy central bank does that, and it wouldn't be good for, if we did do that, it would be good neither for our credibility nor for the credibility of U.S. fiscal policy. So it's just not something we take into consideration.
Victoria. Hi, Victoria Guida with Politico. When it comes to the renovations of the Federal Reserve's headquarters that the administration has been looking into, do you see their interest in that issue as being directly tied to the president's push to get you to lower interest rates?
Not for me to say. I will say we had a nice visit with the president. It was an honor to host him. It's not something that happens very often at the Federal Reserve to have the president come over, let alone to visit a building. But it was a good visit.
Are there any aspects of the project that they've raised that you see as making you reconsider any aspects of the project?
So, you know, this project was hatched and conceived almost a decade ago now, and we went through the very long process of clearing it through historic preservation at the National Capital Planning Commission, and a lot of back and forth there. It was very constructive. We started out to do the work, and we're very well along on that work, and I was quite pleased to have the president say multiple times that what he really wanted to see was us getting this construction completed as soon as possible. That is our focus, and that's what we're going to do.
Andrew.
Thanks, Mr. Chairman. Andrew Ackerman with the Washington Post. What message do you take from the fact that inflation hit 2.1% last September and has bounced higher since? Why do you think financial conditions are restrictive and a neutral rate's below 4% when inflation has stopped falling for almost a year?
So inflation, when you talk about these 12-month inflation measures, you're always battling residual seasonality. So we'll have, for example, 2 months of high inflation sometimes early in the year, and then inflation turns lower, and a lot of that may just be an artifact. So that's why we look at the 12-month numbers. I think inflation is most of the way back to 2%. There are things like the catch-up inflation. So, for example, all the insurance costs that they're only now going through inflation, but they actually reflect inflationary pressures from 2-3 years ago. So that's got to go through. In addition, now we have 3 or 4 tenths of inflation in core inflation from tariffs. So, and we can't really separate that out. We're not going to have a separate kind of inflation that isn't the tariffs. We're always going to be dealing with all of inflation. But the composition, as I mentioned, has really changed. And if you go back to the last couple of years, it was all about services inflation, which was being very sticky. Now services inflation is coming down nicely. Goods inflation was well behaved before, and now goods inflation is going up. So the story has really changed. That's partially because of tariffs. It's also partially because we had restrictive policy in place, and we've seen that the result of that gradually work its way through the services economy.
Okay, the other thing I wanted to ask is, are you comfortable that BLS can continue performing their mission effectively if they take an 8% reduction in headcount and authorized spending as the administration has proposed?
I'm not going to comment on the administration's proposal. I do think, as I've said, I think that we're getting the data that we need to do our jobs, and I think it's really important that good data helps not just the Fed, it helps the government, but it also helps the private sector. People in the economy, they use this data a lot too, so it's quite important for our economy and certainly for the Fed's work and other government agencies' work that we continue to get better at data. That's what we've been doing for 100 years. We've been getting better and better and better. It's very hard to accurately capture in real time the output of a $20+ trillion economy. And the United States has been a leader in that for 100 years, and we really need to continue that, in my view.
Edward.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. How concerned are you with the data that we're coming in, showing no significant upward trend in inflation over the past 6 months, that the wait-and-see approach for inflation is actually giving companies cover to raise prices?
How concerned am I that say that again?
The wait-and-see approach.
He broke him.
The wait-and-see approach, what do you mean by that?
For cutting rates. You're waiting to see if the tariffs will affect inflation. So it's a wait-and-see approach.
Well, so that's where policy's restrictive. When we start cutting, it'll go toward neutral.
Okay. This delay, though, where you're saying there's a one-time price increase for tariffs, I would say, which possibly could lead into bigger inflation or more inflation. Is that giving companies cover, though, to raise prices?
Well, what may be giving, it's not our policy stance, what may be giving some companies will certainly be taking advantage of the fact of the tariffs and all of the discussion of how they're going to, companies will raise prices when and as they can. And you saw it famously in the first administration of President Trump during those tariffs. Washing machines were tariffed, but dryers weren't. But what do you know? The price of dryers went up too, just like washing machines. So companies will often they'll cross the street in a group, if you know what I mean. That'll happen. We don't see a lot of that. I mean, what we see now is basically the very beginnings of whatever the effects turn out to be on goods inflation. And I'll say again, they may be less than people estimate or more than people estimate. They're not going to be zero. Consumers will pay some of this. Businesses will pay some of this. Retailers will pay some of this. But we're just going to have to see it through.
And just to follow, if I could, some additional tariffs have been in place since February, and things really haven't broken yet with the economy. So how do you justify to somebody who's looking for a house, who's facing a 7% mortgage and maybe can't afford those rates?
He's going to break him again, Lars.
Well, so the housing is a special case, right? We don't set mortgage rates at the Fed, right? We set an overnight rate, and the rates that go into mortgages are longer term rates.
Yeah,
like
that's
crazy. 30-year rates. It might
That's
be
a
shorter
crazy
than that, but
ass
it's not the
technique.
overnight Fed's rate. It's not that we don't have any effect. We do have an effect, but we're not the main effect.
Of course, it's the main
There are
effect.
going on in the housing sector, and one of those is just there's kind of a long-term housing shortage that we have. We haven't built enough housing. This is not something the Fed can help with, but then that'll be the case even after things normalize. So I think the best thing that we can do for housing is to have 2% inflation and maximum employment, and that's what we can contribute to housing. There are lots of other jobs to do for the private sector and Congress, but that's what we're trying to get to. I mean, we've made a lot of progress toward that. We have a very good labor market right now. Inflation, we were very close to 2%. We're seeing some goods inflation move us away, but so far not very far away.
Chris.
Hi, Chair Powell. Thank you. Well, can you give us a little more about what kind of economic data does the Fed need to see before you'll be ready to cut? I mean, do you need inflation back nearly to target? Are there other things in the pricing that you look for? Do you need to see weakening in the job market? What kind of things are you looking for?
I mean, ultimately, it could be any of those things, right? But you know, if you saw that the risks to the two goals were moving into balance, if they were fully in balance, that would imply that you should move toward a more neutral stance of policy. This is the special situation we're in, which is we have two-sided risk to both of our goals. When we paused, inflation was above target and the labor market was pretty good. So you know, that was a time when policy was restrictive when we paused. And to be restrictive is to be supporting a return to our inflation target, right? So as the two targets get back into balance, you would think you'd move in a way closer to neutral, and that the next steps that we take are likely to be in that direction. What will it take? You know, it'll be the totality of the evidence. As I mentioned, there's quite a lot of data coming in, which before the next meeting. Will it be dispositive of that? You know, it's really hard to say. We don't make those decisions right now, so we'll have to see.
Well, I guess just in terms of inflation, though, for example, like some people would point to if it remains only in goods and it doesn't bleed over to services, then maybe that's evidence that the tariff effect is going to be a temporary one-time thing. Is that kind of thing affect your thinking, or do you just need to see the number come down closer to 2?
We'll look at everything. You know, it's, as I mentioned, you know, a pretty reasonable base case is that this will be a one-time price increase. And in the end, we'll make sure that that's the case. We're just trying to do that efficiently. And efficiently means getting the timing right so we don't, again, if we cut rates too soon, maybe we didn't finish the job with inflation. History is dotted with examples of that. If you cut too late, then maybe you're doing unnecessary damage to the labor market. So we're trying to get that timing right, and that's effectively what we're doing.
Claire. Claire Jones, Financial Times. Just a question on the dollar. We've seen it decline quite heavily this year. I was wondering if there's been any discussion about that at the meetings and to what degree that may be complicating your attempts to get inflation back to target. Thank you.
So this goes back to the division of labor between the Fed and the Treasury, as you I'm sure know, and you know the Treasury only speaks to the dollar. It's not something that's been a topic of you know, major discussion at all at the Fed. I wouldn't say it doesn't come up. If the transcripts, when they come out in a few years, they'll probably reflect some mentions of the dollar, but it would never be a major focus.
And just to follow on, if I may, to Andrew's question, I think the amount of imputed data in CPI now is up to 35%. I mean, is there any discussion of that as well? Is there any consideration of looking at alternative measures, data scraping and so on, in order to just ensure you've got a good read on what's happening to prices in the U.S. economy? Thank you.
You know, we're monitoring the situation. We do, of course, I mean, as you know, during the pandemic, we looked at a whole lot of new kinds of data. People are looking at big data sets that you can get from all sorts of places, and we do all of that. But at the same, we really need the government data. Really is the gold standard in data, and we need it to be, you know, to be good and be able to rely on it. And we're not going to be able to substitute for that, but you know, if we what we need.
Jay O'Brien.
Hi, Mr. Chairman. Jay O'Brien, ABC News. President Trump has obviously invoked your name a lot. He has personally pressured you. Are you concerned the way that conduct might impact the Fed's independence going forward?
I'll just say that, so I think that having an independent central bank has been an institutional arrangement that has served the public well. And as long as it serves the public well, it should continue and be respected. If it didn't serve the public well, then it wouldn't be something that we should just automatically defend. But what it gives us, and other central banks, what it gives you is the ability to make these very challenging decisions that in ways that are focused on the data and the evolving outlook, the balance of risks, and all the things we talk about, and not political factors. And so governments all over the advanced economy world have chosen to put a little bit of distance between direct political control of those decisions and the decision makers. So if you were not to have that, there would be a great temptation, of course, to use interest rates to affect elections, for example. And that's something that we don't want to do. So I think that's pretty widely understood. Certainly it is in Congress. And I think it's very important. I'll just say that.
Maria Eloisa.
Afternoon, Sir Powell. Maria Luisa Capurro from Bloomberg News. You mentioned a slowdown in consumer spending, and I wanted to see if you could walk us through what was the discussion with the committee around that. We've seen delinquency rates rising for upper-income households. How do you see that evolving in the next few months, and how much of a vulnerability that is for the economy going forward?
Consumer spending had been very, very strong for the last couple of years, and had repeatedly, forecasters, not just us, had been forecasting it would slow down, and now maybe it finally has. So I would say, if you talk to credit card companies, for example, they will tell you that the consumer's in solid shape and that spending is at a healthy level. It's not growing rapidly, but it's at a healthy level. And delinquencies are not a problem. You mentioned high-end delinquencies. I don't know what to make of that. I read the same thing. But so generally, if you look at the banks, and when the banks talk about in their earnings calls, the performance of credit has been good. So essentially, you have a consumer that's in good shape and is spending, not at a rapid rate. But it's true, and it was, again, right in line with what we expected, the GDP data that we got this week. And I think it's still a little bit difficult to interpret because you have these massive swings in net exports, which may also be affecting, some of that can affect consumer spending as well. Look, it's one of the data points that we pay most careful attention to, and there's no question that it's slowed. And we're watching it closely, but we also watch the labor market and the performance of inflation. Those are our two variables that we're assigned to maximize.
And just to follow up on what my colleagues were asking about this sense, Governor Waller said that the labor market is on edge, and he was pointing to weaknesses on the private sector. I was wondering, you've said that the main number to look at is the unemployment number overall, but what was the discussion about the state of the private jobs market?
So I'm not going to talk about any individual's, comments. I wouldn't do that. But I think what we know is that private sector job creation, certainly in the last report we'll see on Friday, but had come down a bit. And if you take the QCEW adjustment seriously, it may be even lower, maybe close to zero. But the unemployment rate was still low. So what that's telling you is that demand for workers is slowing, but so is the supply. So it's in balance, oddly enough. You've got a very low unemployment rate, and it's kind of been there for a year as job creation has moved down. But also we know that, because of immigration policy, really, the flow into our labor forces is just a great deal slower. And those two things have slowed more or less in tandem. If you look at things like I mentioned, quits, look at wages. Wages are gradually cooling. Look at vacancies to unemployment. Those things have been pretty stable they haven't really moved a lot in a full year. So I think if you take the totality of the labor market data, you've got a solid labor market. But I think you have to see that there are downside risks. You don't see weakening in the labor market, but I think you've got downside risks in a world where unemployment's being held down because both demand and supply are declining. I think it's worth paying close attention to it, and we are.
Nancy.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. One more question on the lack of unanimity in today's decision, the 2 dissents. Was there talk during the meeting? I know you're not going to talk about exactly what individuals said, but in general, was there talk during the meeting of cutting rates, and what was the case against that at the meeting?
Sure. So, we have an economic go-around where people talk about the economy, and then that's yesterday, and then today we have a monetary policy go-around. All the way around the table, everyone gives their views. So the discussion around policy was, the majority view was still what it has been, which is that inflation's running above target, maximum employment is right at target. That means policy should be a little bit restrictive, somewhat restrictive, because we want inflation to move all the way back to its target. So that's where people have been and still are. 2 of our members felt that the time had come to cut, and that they, for the reasons that they're going to express. I won't tell you the reasons. They'll issue some kind of a thing in the next day or so. So, but that's the story, and I would say, well argued, very thoughtfully argued all around the table, good arguments, and it's a situation where, unusual situation. The economy is in good shape, but it's an unusual situation where you have risks to both your employment mandate and your inflation mandate. That's the nature of a supply shock. And it's probably not surprising that there would be differences and different perspectives on that, as well as different views of where the neutral rate is, so that different views of how tight policy is. So we have those. I will say what you hope is that people, explain their positions very thoughtfully and clearly, and we absolutely had that today, all the way around the table. I would call it one of the better meetings I can recall from that standpoint.
And you've said you're waiting to be confident inflation is heading toward your 2% target before you start cutting rates. When you do get that confidence, would you be in favor of lowering rates right away?
It's not quite the way I would put it. I said that's why we think policy should be restrictive, is because inflation is above target. When we have risks to both goals, one of them is farther away from goal than the other, and that's inflation. Maximum employment's at goal. So that means policy should be tight, because tight policy is what brings inflation down. If you came to the view that the risks to the two were more in balance, that would imply that policy shouldn't be restrictive. It should be more neutral, more a neutral stance, and that would be somewhat lower than where we are now. No one knows exactly where that is. So that's the framework I think I'd be taking, and we'll just have to see. We're going to be obviously looking at a lot of data in the next cycle. It is one of the cycles where we have 2 employment and 2 inflation reports, and we'll see where that takes us.
Jeff Cox.
Thank you, Mr. Chairman, for taking the question. Jeff Cox from CNBC.com. A metric that you like to cite a lot is the final sales to private domestic purchasers. That was down to a 1.2% gain in second quarter from 1.9% in Q1, suggesting that there's some softening in underlying demand. I just wondering if you look at that and you combine that with some of the housing numbers, the weakness that you acknowledged at the top of your remarks, that the housing market is in fact weak, and the inflation numbers from GDP today came down to 2.1% for headline, 2.5% for core. I'm wondering how much more movement you would need to see from these data points before you would be comfortable with cutting in, say, September.
It's going to be the total. Hard to answer that specifically. PDFP, I think, for the first half, private domestic final purchases, or final sales, as people call it, was 1.6 on the first half. GDP, I believe, was 1.2%. That's the whole half. You mentioned the quarters. So those are slower, but GDP is bumpy quarter to quarter, half to half, and often gets revised, after the fact. The labor market data we still think continue to think is the best data we have on the economy, and that shows a 4.1% unemployment rate. It shows wages, still at a healthy level, but moving ever closer to what we would regard as long-run sustainable, consistent with longer-run productivity and 2% inflation. So the labor market is actually still quite solid. Inflation is above target, even ignoring tariffs. It's a little bit above target, and tariffs. So we're watching all of that. And again, trying to do the right thing in what is a challenging situation because you're being pulled in two directions, and you have to decide which of those to go in. And actually, at some point, if they're sort of equally at risk, then you really want to be at a neutral policy stance, which we're not right now.
So it'd be safe to say that if the data kind of stays in line with where it is right now, that you wouldn't be comfortable with cutting in September?
I'm not going to say that. No, I just think we're going to need to see the data. And it can go in many different directions, the inflation data and the employment data. And we're going to make a judgment based on all of the data and based on that balance of risks analysis that I mentioned.
Thank you.
Greg, Rob, for the last question.
Thanks, Chair Powell. Greg Robb from MarketWatch. The Treasury Secretary has said recently that it would be confusing for the markets if you stayed on as a governor after your term as chair ends. And I was wondering if you had any update for us on a decision on that front.
Sorry, I do not have any update for you. Thanks very much, everyone.
Okay, well, that didn't go great. Alrighty. Well, that definitely isn't what I hoped it would be. But it is what it is, isn't it? So what we're going to do is I'm going to talk about what just happened. Okay. We're going to talk about what just happened. And then I'm going to talk about why the market's dumping. And instead of going super deep into each crypto and doing a bunch of technical analysis, I'm actually going to bring Cade on. Cade's going to talk about it. Cade is a certified, he's a CPA, if you didn't know. And he's very, very, very much more knowledgeable of the economy and all that stuff than I am. So we're going to bring him on. He's going to give his opinion about what all this means for the crypto market. Then we'll do a bit of a Q&A, then we'll probably wrap this up. So if you guys are cool with it, let me know in the chat. We're going to have a bit of a discussion of what the hell just happened. So before we get into that, though, what we can see is, yeah, the crypto market's not liking what we just saw. Obviously, you can see Bitcoin's price is just absolutely nuked. Absolutely nuked. Falling from $118,000 for Bitcoin all the way down to $115.7 thousand, back towards the bottom side of the golden zone and, well, back in the black zone. I told you guys earlier, like literally just an hour ago at most, I said right here, I was like, the risk is that Bitcoin might fall back into the dark green and the light green zone, which is the better place to be buying, the better place to be going long. And if you were to open up long trades right here, you're taking a risk of not being able to down here. And well, what do you know? It pulls back. So what does this mean for the crypto market? Well, it's not the end of the day, right? Like, it's not the end of the world. What he just said is just definitely going to put a little bit of a dampening on the market that we've been seeing. And it very well could slow down the crypto market and slow down any of those gains that we had been hoping would happen in August. Now, as I mentioned before, August and September, historically, not great months for crypto. I mean, we just talked about this. Said, listen, August, September, historically not great months for crypto, so it's very dependent on what Jerome Powell says. What he came out and said was that the data that we're gathering from the economy right now is not displaying enough evidence that the current monetary policy is like pulling it back or slowing it down. We're seeing advanced GDP coming in good. We're seeing inflation still a little bit sticky, still a little bit high, all of which would entail that the monetary policy in place right now isn't too high and it's not slowing anything down. So what he was implying by saying that is he sees no reason right now as to why they need to cut rates, and he'll give it a couple more months and then reassess it in September. It feels to me like unless something happens over the next 2 months, even a September cut feels like we're pushing it. It seems like that's even becoming much less likely. And I would assume that the odds markets are going to shift in the direction of no cut in September because of what he just said. Now, because he just said that, and because that was kind of the implication that he made, I think a lot of people are very upset by it, and a lot of people are selling. And that's the reason why you're seeing the crypto market falling off, is because you have to understand that the reason why crypto pumped so much over the last couple months is because people have been expecting to enter into an environment in which interest rates are being cut, right? Interest rates are falling. There's more liquidity. Money is easier to access. But if that's not the case, and if we're not going to enter into that environment in the next month and a half, 2 months, 3 months, if it is going to take longer, well, people are just going to go and pull profits off the table, right? Because the narrative that got us to this point is now kind of possibly dead, if not just dampened a lot. And so a lot of people are up a lot of money right now. And now they're just going to start pulling some of that profit off the table, because why wouldn't they? And so what you're seeing right now is a lot of the people who push this market up, pulling the market back down because they believe that the narrative that they invested into is coming towards a close. So, of course, when you combine these things together, you're going to get a day like today where the crypto market does fall, exactly like I warned you about yesterday. I told you, listen, there's a risk that this happens. And this morning I told you, listen, the fact that advanced GDP came in good is a good thing for the everyday person, but for investors, they might not like it because it doesn't give the Fed enough reason to cut interest rates. And well, here we are. And so it's kind of just a part of the game, right? It's something you have to get used to. I definitely wouldn't be surprised if the crypto market doesn't give us some crazy gains over the next 6 to 8 weeks. There would need to be some sort of big narrative that would allow for that push to happen. There would need to be some narrative to allow for that catalysm, that for the crypto market to really start gaining. Something needs to now happen to spark it. Not having an upcoming interest rate cut, or seemingly an upcoming interest rate cut within the next month or so, it kills that narrative off a little bit. And it wouldn't shock me again if this market does start getting a little bit boring, if things do start slowing down. Now, that would be the obvious play. Okay, that would be the obvious play. The obvious play was that it would slow down, cool off, pull back, probably for the next 6 to 8 weeks or something like that. Okay. Knowing that though, the crypto market doesn't always do what it's supposed to do. And who's to say that everyone will think, okay, well, the crypto market's probably going to be boring or it's going to go down. I'm going to just start buying now to try to front run that next wave upwards. People use this as a buying opportunity, and then the market starts to turn around. So the obvious play here is that the crypto market goes sideways and or is boring for the next 6 to 8 weeks. The manipulation, lizard, freaky, sketchy, crappy thing that could also happen is that it doesn't do that. Everyone thinks it's going to do it. And because everyone thinks it's going to do it, it's the very reason as to why the crypto market pumps from here. So I think it's not a 50-50. I would say the odds are definitely more stacked in a direction that the market's not going to give us any crazy gains right now. But there is that slight chance that it does start to just pop up out of nowhere as a result of everyone expecting no pump. Because remember, the best pumps happen when no one thinks they will. The worst dumps happen when no one thinks they will. No one thinks the market's going to pump right now because of this. There is a possibility that it does solely because of that. I'm not relying on it, but it is something to keep in the back of your mind. Now, what am I going to do as a result of this? Guys, you know what I'm going to do. The market's down. Things are going sideways. We took profits at the top. Put in the chat. What do you think I'm going to do right now? Just go ahead and guess. In other news, if you want to see something funny, quick little $750 down over the last 10 minutes. That's never fun. But yeah, just put in the chat. What do you think I'm going to do? I mean, you guys know what I'm going to say. You know what I'm going to do, but I'm curious to see what you guys are going to say. DCA, buy, DCA. Exactly. You guys kind of get the way that I play this game. 1 second. 1 second. Give me a second, guys. Yeah, you guys know the game that I'm going to play. I'm going to use this as a buying opportunity. I'm going to take a tiny amount of my crypto and I'm going to start buying. I did a little bit of purchasing on altcoins earlier this morning, and now I'm going to increase the size of those purchases that I did, lower those average costs for today's DCAs. Sorry, I'm just getting Cade on board here. But yeah, so what am I going to do? I'm going to go in. I'm going to take some of the profits that I pulled over the last week, over the last couple of weeks. I'm going to reinvest it back in now that the market's pulling back a little bit. All the profit that we took, all the sales we did right here, now we have something to do with that cash. We're going to go in. We're going to take a little bit of cash. We're going to buy the dip. Now, am I buying a lot? No, not right now, not personally. And the reason why is because we're only in that 50 to 25 threshold. We're only in this. If we get to the light green threshold, I'll buy a lot more. But for now, I'll do a little bit of purchasing on Bitcoin and major altcoins while they are pulling back, because everyone's worried, everyone's freaked out, everyone's saying, oh, this is going to be it. I saw Twitter, I checked Twitter just now, and everyone's like, all right, the pump's canceled, altcoin season canceled, blah, blah, blah. And the second that everyone starts saying shit like that, that is exactly whenever I start buying. It's exactly when I start getting in. And so that is my next play right here. That's the next move for me. I think everyone's going to expect that this crypto market's going to fall as a result of Jerome Powell coming out and basically implying that they have no reason to cut rates anytime soon. Everyone expects the market's going to fall because of that. And so I'm going to use that personally as an opportunity to DCA because most people are expecting that the market will not go up. I like to go against the crowd. I like to move against the friction. That's my game plan and that's my strategy. But what is it whenever it's only one person's opinion? Why not bring a real certified financial advisor onto the stream? Someone who is a financial advisor, someone who can offer financial advice. Welcome to the party. And I just wanted to say that before he could argue with me. Welcome to the party, my good friend. Hold on. Kate O'Neill, what's up, dude?
What's up? Also, everybody ignore what Tyler said. I am not, in fact, a financial advisor. He just likes to give me a hard time. So
yeah, we all lie every now and then. I do it too. Anyway, so Kate, I don't know. Were you watching the FOMC just now?
no, I wasn't watching it. I've been kind of keeping up with it. Generally, to be completely honest, you can watch the video that I made this morning. I basically said exactly what Jerome Powell said. There's just no, like, you can't just cut rates because you want to. Like they're usually, at least historically, I feel like I might be getting a little bit of some background.
Okay. I can't hear it on your side. But I may go grab my headphones. But just do your thing.
Okay, no worries.
Yeah, just give them your opinion about it. I'll be right back. I'm gonna go get my AirPods.
Okay, cool. But yeah, so that's essentially kind of what I was saying is like, usually people don't just cut rates for fun, right? Like there needs to be a reason to cut rates, and we don't necessarily have that right now. What we have is like an economy that's good. We have inflation, like GDP is higher than normal, does not mean that we need financial or fiscal stimulus. We have an inflation rate that is within kind of the Fed set band of 2 to 3%. Yeah, it might be towards the lower end of that, but it's still within the band. Like why exactly do we need to cut rates? Now, of course, I too would like cheaper interest rates to buy a house and, things like that. But that's not necessarily like a reason in itself. Like jobless claims, at least up until this point, have been fine. GDP's good. Inflation's good. So to me, the reasonable option seems to be to do nothing because there's nothing really to do. Everything is good. It's one of those, if it ain't broke, don't fix it. And it's not broke. So what are we trying to fix through lowered rates other than, yeah, maybe the economy would do better. Maybe some of this stuff would happen, but like, that's also not needed. We just had a GDP print 0.5% above forecasted. So yeah, I can't say I'm particularly surprised with the outcome. I also can't say I'm particularly surprised with the reaction within the crypto space either.
Yeah. So, and hopefully you guys can still hear me. You can hear me, Cade, right?
Yep.
Yeah. So that is kind of one of that's kind of the two sides of it, right? The first side of it is the economy's not broken. No one, the economy's not in a terrible spot right now. There are a bunch of things that are causing uncertainty here in the market. So at the end of the day, us going in and lowering interest rates only opens the market up to risk unnecessarily. It's not like the economy's not growing. The economy's clearly growing, right? Maybe not as fast as it once was, but it is clearly growing. We're not particularly in a recession. The economy is obviously in a better spot right now than it was a few years ago. And I think we can all agree on that. The other side of the coin, though, and I do personally find myself kind of leaning in favor of that side, right? The other side of that, though, and obviously I would believe this is where Trump is coming from, is that the economy is in a good spot, but it could be in a great spot. And the only reason it's not in a great spot is because Jerome Powell's holding it back. It's an interesting perspective, but I do believe that it is ignoring the risks that come with raising interest rates. I think one of the most lowering interest rates, sorry. I think one of the most catastrophic things that could possibly happen right now is interest rates get raised or interest rates get cut. Everyone gets all excited. Inflation gets really bad and we have to start raising them again. I think that would be about as bad as it could possibly get. So I'm curious of your thoughts, and I may have missed it, so I'm sorry if I'm having you repeat yourself here, but I'm curious if you think that there is any validity in the idea that the economy could be in a much better position, but it's not because of interest rates.
What would be in a better, I understand the point, but I also think there's also the counterpoint as well. The only actually valid reason that I see, at least, to lower interest rates is refinancing the debt. Now, obviously, that's a little bit of like a selfish decision to be made in the U.S.'s perspective, but also it's the Fed. It's like the central bank of the U.S., right? So to me, the most reasonable thing to happen would be actually to have the Fed cut rates so we can actually refinance our debt at lower premiums, which of course would be very good for the U.S. taxpayer and be very good for the U.S.'s like balance sheet over the long term. So that to me is the most valid reason to cut rates. But as far as like, you know, it could be in a better spot. We'll define better, right? Like if we gave everybody $1 million for free, like the economy would also probably be in a better spot because people would spend more, you know, right? So it's like, but then like, what's the outcome of that further down the road? And I think that the thing of like using interest rates to try and juice artificial growth, like doesn't make a lot of sense. Like, for example, if you look at the great financial crisis, we could debate till we're blue in the face whether it was, you know, the merits behind it or anything like that. But if you look at the great financial crisis, like the only reason, in addition to an F ton of government like money printing, the only reason we were able to react somewhat as well as we did, and it was a great recession in terms of instead of a great depression, was because we had essentially interest rates that could be cut to near zero. The whole reason COVID was a little bit more of like a V-shaped type of situation. Now, of course, we had the inflation that was a knock-on effect that you can see in real time of what happens when you lower interest rates too low. But we had these like interest rate buffers, right? Like if you sit at zero, there's no buffer left. I guess you could go negative like the Japanese have, but like probably not recommended. So like to me, it's like I get it, but also like, you know, maybe this is the conservative, like fiscally conservative side of me that comes out saying like, I would rather have a buffer if things were to actually get bad instead of like just juicing artificial growth. Yes, I understand that rate cuts would be better for my bags, but I don't necessarily think it would be better for the country, you know, kind of long term.
So there are, and I think that all makes a ton of sense. There are people who do believe that in certain perspectives that cutting rates could actually be good for the little guy, right? Because a lot of people say, well, the only reason people are vouching for interest rate cuts is so that people who have investments do better, right? But at the end of the day, like, the point that I'll see a lot on Twitter, and I shouldn't be doom scrolling Twitter, I know, but the point that I will see a good bit is people saying the only people who care if interest rates being cut are going to be cut are the people who have money invested, because obviously QE, cut interest rates, more liquidity, prices go up, and this is only going to increase the wealth gap. And that's kind of the little thing I've been saying back and forth, like this is just a way to increase the wealth gap by cutting rate, blah 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 blah. But the other thing that I do consider, for example, is the amount of people who are not buying cars, right? The people who are not buying homes, that are not willing to move from one place to another, maybe because they want to, because the rates that you have to pay right now are just absolutely stupid. Like me, for example, this is a great example. I do plan on moving to a completely another state at some point, but I'm unwilling to leave my current house at the rate we're at right now to go buy another house at the current rates that they're at. I simply just will not do it. So I won't leave, right? And I feel like a lot of people are being locked into certain positions because they have no choice. And the same essence in which, like, if someone needs a car right now, they just have to go buy a car with a crazy high ass interest rate, when if they didn't have to do that, now you're putting money into the pocket of the little guy every month and putting them in a little bit of a better scenario. So I wonder if you do see that there is value in cutting interest rates from that perspective as well, outside of just obviously refinancing the bigger debt from a more macroeconomic perspective.
Yeah, no, I mean that's a, like, you know, if you look at like the housing prices and things like that, I mean that's a whole different issue, right? Because with the housing prices, yes, interest rates are high, and yes, but like they're not actually really that high, right? They're high for what we're used to, but they're not high relative to historical rates. The thing that is high is the actual cost of the house, right? I mean, the price of houses keep going up. And then, of course, interest rates are kind of the levers you can pull. So to me, like, in my opinion, this is something, and unfortunately, like, it's a bit of a kind of like a catch-22, right? Because let's say we cut interest rates. Yes, the normal person gets to like get cheaper houses, which I think is good. But I think it all kind of comes back to this quote that Albert Einstein made regarding the eighth wonder of the world, and that's compound interest. He who understands it earns it, and he who doesn't is destined to pay it. That ultimately is the issue, right? Because if we cut rates cut for everybody. And so if rates cut for everybody, yeah, like we might be able to get cheaper houses, but people who know how to use leverage, particularly low interest leverage, are going to be buying office buildings, hotels, and then prices are going to inflate. And then with that, like that's kind of what we saw with houses, right? I mean, there was this whole thing about how I think it was Blackstone. I think it's Blackstone. Blackstone was buying a whole bunch of residential houses because they were essentially turning into like a rental portfolio, right? Well, that just boosted the cheap house prices even more because now people who understand how to use leverage are kind of taking advantage of it, right? So it's definitely a difficult situation, but I do think that like it's not like lower interest rates benefit the little guy only, right? It actually probably disproportionately benefits the big guy because they now can go pull a $3 billion line of credit at, like SOFR plus 1, which is now 4% instead of 9% or, whatever.
Yeah.
So,
no, that does make a lot of sense. And, one interesting point someone put in the chat just now is they said the data doesn't suggest that people aren't spending. I believe this was the point that was made. The data doesn't suggest that people aren't spending. It actually suggests that people are overspending. But the truth is the data does show that anyone who took on any loans while interest rates were below 3% have not made a move in years. And so it is just it's a back and forth sort of thing, but it's an interesting take. One thing that I like to think about all the time is like, okay, someone asked me earlier, they said, Tyler, it doesn't seem like you like Jerome Powell. Why is that? Or is my perspective wrong? I think it was something along there. And I actually want to go ahead and say this. Like, I don't actually think I would do much different than Jay Powell is doing right now. I'm not quite sure. Like, I'm not sure I'd be out there just putting my neck on the line saying, okay, let's just cut interest rates and just see what happens, right? I'm not quite sure I'd be doing. I'm not sure I'd be doing anything differently than he did. Now, I'm talking about right now. Years ago, I think a bunch of dumb shit was done for absolutely zero reasoning. But I'm talking about right now. The biggest reason I personally just I despise Jerome Powell is because he just does not answer a question. It's like you ask him a question, he gives you an answer that has nothing to do with the question that was just said. They completely revoke themselves of any wrongdoing and only talk about the positives. I think it's the most politician shit ever. It's annoying. But my opinion about the actual situation is right now, would I cut rates if I was in his position? Which, mind you, there are several people in the Fed. It's not just him. But if I was in their position, would I do the same? I'd probably keep it about the same as well, if I had to guess. I'm not sure I'd be out there taking the risk of cutting rates. I kind of hope they did for shits and giggles. But would I be out there cutting rates right now when it doesn't seem like the economy particularly needs it? I'm not sure. And I do think it's a hard spot. But I'm curious, would you be doing something differently than they are? And it doesn't, and one thing that people also tend to forget, like, cutting interest rates is not the only thing that the Fed is capable of doing. Like, there's a wide array of shit that they could be doing on a quarterly, monthly, or even weekly basis that could impact the economy. So I guess just out of pure curiosity, like, is there anything that you would be doing a little bit differently? Or is it just kind of like, just wait and see? Is that the best approach?
Yeah, I mean, I think I would probably just wait and see. I mean, what exactly is there to fix, right? Like, I completely agree. Like, a lot of what's going on right now, to me, I'm not sure if it's as much his problem or if it's people, being a little bit frustrated, or maybe like he lacks or has lost some credibility due to his kind of slow response to the inflation issue, like kind of coming out of COVID. I think there's probably an argument to be made for that. But ultimately, yeah, and keep in mind, like, everybody, I think there's a lot of this is framed as like, yeah, like Jerome Powell just decided not to cut rates today. Like you rightly pointed out, that's not how that works. There's 7 people.
Yeah.
Now, in today's meeting, 2 of them did dissent, meaning that they disagreed with the decision to keep the rates level. But again, how much, like, Jerome Powell's term is up in March. How much of this is jockeying for trying to get the next chair, because everybody knows what Trump wants. And so if you can show that you're advocating for that, maybe you have a kind of a leg up of being in the next Fed chair. So I don't necessarily believe that they might dissent, but I definitely think there's some gamesmanship and politics involved with it. So that's kind of how I view it. But yeah, that's the biggest thing is yes, I would like rates cut, but I don't exactly understand the reasoning why. And if people have a good reason as to why, throw it out, but other than I want a cheaper house, which I do too, but the numbers don't say that we need cheaper houses right now. The GDP, GDP is growing. Now, of course, I think the housing issue is a whole separate one all its own. So, we can unpack that when we solve the world's problems.
So, no, that makes a lot of sense. And one of the things that I have noticed in the chat is people disagree with your idea that rates are not high. Now, or you said rates right now are not high. And most people who are new to this, say people my age, right? Whenever I turned 18, 19, rates were very low. They were much lower than they are now. But the truth is, if you look at the federal funds rate historically, it's not that high. If you factor in rates from say the 70s, then the 80s, then the 90s to the 2000s, 2010s, 2020s, rates are not that high. What's the historical average rate? I can't remember what it is, but it's not far from where we are right now because of obviously what happened in the 70s, 80s, whatever. So maybe that's something people should also do a little bit of extra digging on, because I think everyone is expecting that Jerome Powell is going to come out when they do start cutting rates, that they're going to cut it down to say 2%, 1%. That's not going to happen. They don't need to go that low. Yeah. You know what I mean? But if we're talking about say 3 something, it's reasonable. You know what I mean? So I guess I'm curious, do you think that when they start cutting, do you agree with me more than anything? Do you think that when they start cutting, they'll probably cut a lot less than people expect?
Yeah. Barring some wild, some wild change happening, I think probably 3.5 is probably the low. And that might even be low, right? Obviously, I'm not a PhD economist, so this is me just kind of taking a swing. But yeah, I agree, and I don't, I don't think more than a couple cuts is going to be, is really going to be that far. So.
Sure. Yeah, no, that makes a lot of sense. That's interesting. There is a whole fight going on in the comments right now about French fries not being born in France, just in case you were curious. But all in all, the state of crypto. What are you thinking? I think so what I said right before you got on is the probability in the crypto market, bar manipulation, the common sense thing, is that the crypto market will probably take a bit of a breather for what could be 6 weeks, 8 weeks, calm down a little bit. I think the majority of the narrative that got us here was everyone expecting interest rate cuts. That was one of the big players in the narrative, right? Liquidity injection obviously was there, but I think the big narrative why everyone was buying was because of everyone saying, oh, we're getting close to interest rate cuts, and it was like a catalyst that just sparked all of this excitement. I think the obvious thing that would happen here is that the crypto market would just slow down a bit for a couple weeks, let it take a breather, more of a breather than it's already taken, maybe pull back a bit, and then start to aim its sights towards the end of the year, obviously Q4 being the ideal time frame. August and September historically are not great months for crypto, and I see no reason as to why now August and September wouldn't be great months for crypto now, right? I think that's the obvious play. What I do know is that manipulation is at an all-time high this year. Dumb, weird shit happening is everywhere. So it wouldn't shock me if crypto rallies for absolutely no reason, because that would be now the Max Payne scenario. If everyone starts taking profit, everyone starts selling. Look at short liquidations right now. If everyone starts betting the market's going to go down, the market doing the opposite would make a lot of sense. So I'm kind of caught damn, I wonder which one. Is it going to take the natural response or the manipulated response? That I don't know, but I'm curious if you're leaning in either direction.
Yeah, I usually am same as you. I definitely am looking kind of toward the, what will actually wreck the most people is kind of usually the route that I take. So I think that, probably everybody knows August is bad. I do think the sentiment, especially after this, is probably going to continue to get worse. So it would not at all surprise me if we saw some more like sustained, either just choppiness or even maybe a little bit of like some retracing back to some key level of support, while still maybe potentially holding that macro uptrend, right? I mean, that to me seems like it could make a lot of sense. However, like we'll have to see. I think nobody really knows what the future holds. So, yeah.
Makes sense. One thing to consider is that still max pain on the 30-day liquidations is downwards, right?
Mhm.
There are still people who are not concerned by what happened in the market right now. And Bitcoin, say going back to say 105, 107K does put billions of dollars in liquidations up for grabs, right?
Yeah.
And so it is an interesting theory, or it's an interesting thought that even at this given point, the worst case scenario, the max pain scenario, and the best case scenario for the lizard people would be the market falling down. And there is some alignment with what should happen and what liquidations say would happen. And I think that's enough for me to think, okay, yeah, this market might cool down. It might pull back. We might see it go sideways for a while. And I think that's worth paying attention to. But what is worth noting, you look at the 1 day, a huge flip there. I mean, that was a fast flip. We were almost even over the last couple of days. Now we're flipping fast. And you look at the 7 day, 7 day has also flipped. A little bit more to go. 110, 111 puts these guys out of commission. But on the shorter time frames, we are seeing these liquidations start piling to the top side. And all that tells me is that even if this market does start to pull back, don't be shocked at pumps. Don't be shocked to see the market pulling back, and absolutely sending out of nowhere. Pulling back, sending out of nowhere. And you know what that looks like? What that looks like historically is what we've been in. You're gradually going downwards, but you do still have these moments where the market recovers and smashes anyone who's over betting that the market's going to go down. So the way that I personally would play this is continue to play the channel. Continue to play the channel. Sweep the lows, sell the highs over and over and over again until something breaks. I still believe there's an over 70% chance that this market breaks upwards, that Bitcoin breaks out of this descending channel upwards. But I do believe that it is a threat that this market may continue like this. Bitcoin may continue like this. And on days like today, when the market's falling and Bitcoin dominance is increasing, it's a further sign that we are moving back into a period where Bitcoin will control the market. It'll take control of this market. And I think we are shifting back in a period where the primary focus needs to be on Bitcoin. And so my general thesis, general thinking here to kind of, jockey off of what you said is, look, I think that it makes a lot of sense for this market to continue downwards. There's still a lot of liquidations below us. But at the end of the day, I'm not convinced that the bull market is over. I'm not convinced that we're not going to be able to see gains at any given point. I just think the market's in a needed cool down after putting in all-time highs for Bitcoin and regional highs for many of your altcoins. And it's going to take us getting out of the summertime, probably out of some of this craziness we've been seeing, all of this volatility, to make that big run. We've just lost the main catalyst that got us here. So it's going to take a new catalyst or a new just feeling in the environment for the crypto market to start to rally. So my current plan is, and tell me if you agree with this, my current plan is to start to take some of the profit that we had been pulling from the crypto market over the last few weeks, take some of that profit and reshuffle it back into Bitcoin as we are below the 50% threshold here in this dark green box and light green box, and shuffle it into some of my altcoins as well, especially the ones that are pulling back. Some of the greatest ones to think about right now, XRP, Solana, SWI, XLM, HBAR, Caspa's maybe on that list as well, possibly a couple of alts too. So that's my general approach. That's exactly what I'm doing right now. I am still going to start shifting some of my cash over into the stock market. It is a place that I am moving money to personally. And that's my approach. But I'm curious, are you kind of in alignment with that? Are you trading? Are you range trading this at all? Are you more focused on the DCA and the macroeconomy? What's the look there for you?
Yeah, I'll probably start like shifting into range trading. I've always had issues playing shorts, so I might start to experiment with shorting, and we'll see how that goes. I'm just too bullish to ever short, I feel like. But there are several times, especially over the past several weeks, where it's like if you look at the fundamental like metrics, it's like it does look like it would probably be a decent time to see a little bit of a retrace, and maybe a short works for that, So I'm going to be trying to kind of mess with those. We'll see how it goes. But yeah, like I don't think like, bull market's not over. Like we'll continue up. I think like, because I know we've talked about this kind of privately, but I'm sure we probably mentioned this on stream at some point before, but it's like, end of 2025, beginning of 2026, I think has been the call for quite some time. So this is all, in my opinion, like this. If anything, this run that we saw kind of in this May, June, July timeframe, to me, if nothing else, it kind of confirmed that there is still the momentum there and it's moving in the direction that it should be. It's not like it's going to get shifted forward. It's not like it's going to get shifted back. It's just this level of sentiment and this level of momentum is there, and it should be there, and we'll continue to see how it goes.
That's a great point. And it's a point that I think a lot of people have missed as well, is that you remember how 3 or 4 months ago, and you probably saw it on your YouTube videos as well. By the way, guys, I did put Cade's YouTube channel in the description. If you don't see it, just refresh it. Go subscribe to him. Say thanks, Cade, our financial advisor. But one thing that I do remember from like 3 or 4 months ago is a lot of people saying there will never be another altcoin season. There will never be, retail is gone for good, right? A lot of people were saying that the hype that the crypto market saw was not going to happen again because Trump killed it off with Trump coin, drained liquidity. But I think July showed us that in the right environment, in the right conditions, this market has gas and it can put in hundreds of percentages of gains. And the reason why I say that, and if anyone wants to argue with the thesis there, is look at bubbles still on the month. 150, 160, 116, 100, 100. There's hundreds of percentages of gains in this market still over the last month. And is this going to continue? Probably. I think it's less probable over the next coming weeks, but it very much so can. And I think what July has showed us is that in the right situation, in the right conditions, this market can run. And so when given opportunities like today, or in these moments where the market's dumping, being able to rotate some of that cash, some of that profit back into the market still serves as a good opportunity. And again, I see no reason as to why this crypto market can't continue upwards. You can't convince me that Ethereum will not eventually break this damn range. One day, ETH's going to get past this. And when that day comes, all hell breaks loose for the altcoin market. And until then, we just play the game as it needs to be played. And so I think that's a great point, Cade. I appreciate you jumping on the channel. We are going to go ahead and wrap this bad boy up here in a second. But if you guys have not followed Cade already, his link is down below. He posts about a ton of different altcoins. You can check out the channel. It's down there. Give him a subscribe. As I said before, he's a financial advisor, so feel free to, hold on, let me say this whenever he's off there. Hold on one second. He is a financial advisor, so feel free to just do whatever you want. Buy whatever he says for you to buy. But yeah, all in all, guys, well, that has been the stream. Look, Cade, actually, if you want to stick around for like 5 or 10 minutes, what I am going to do is I'm going to open up the chat. If any of you have questions, thoughts, concerns, anything you'd like to throw at us, we'll go ahead and answer those questions for you here. And then we'll go ahead and wrap this bad boy up. So while you are leaving some comments down in the chat below, one thing I do have to do is shill, because I'm a businessman. You guys get it. One thing that you guys need to remember is the link to the playbook is down below. It's a free resource that you can use today. It's a huge drive of a bunch of stuff, videos and notes and all that stuff on just about anything you can think of. I did just add a module about crypto taxes towards the bottom if that interests you. If you are trading crypto, you can go get up to $10,000 in bonuses with the link down below. It's one of the best promotions on YouTube for an exchange right now. So I explain it all on the link down in the description below. Feel free to go follow me over on Instagram if you do want extra content from me every single day on Doge, XRP, XLM, Bitcoin, and many more. And last but not least, do not forget again, while you are down there, to go follow our guy Cade, who does post a ton of content, and his video quality is better than mine, so shout out to him. But anyway, so with that in mind, let's go ahead and let's jump into the chat. Let's see what people think for our financial advisor, Cade O'Neill. So, how much percent do you recommend in your portfolio of Bitcoin? How much percent of Bitcoin? I personally am still around 50. 50% in my trading portfolio. In my long-term portfolio, I'm all the way up to like 85% at this point. So over 50%. For me personally, not telling you what to do, can't guarantee any results. Okay.
Yeah. So I mean, if as a percentage of crypto, like the majority at least, I think 50% would be a good starting point. Again, my opinion, not financial advice. You can make your own decisions. If you're a true degen, you might think 50% is really boring and lame, and that's fine. But yeah, for me, I think starting at like 50% is probably good. And really, like, I think I'm like 70 or 80%. Yeah. Like I talk a lot about altcoins, but to me, it's one of those like, and we actually talked about this when we were in Vegas, Tyler, I think, when we were talking about like you start something at 1% of your portfolio, but it really does quite well on 10x's or 15x's or 20x's. Like, even though it's 1%, like it could end up making 10, 15, 20% of your portfolio when it's all said and done. So especially with these super small speculative ones, from a risk management and from a portfolio management perspective, you really don't need to go too hard into any of them. So that's kind of how I view that.
Small positions make big gains in altcoins. So makes sense. This is a good question. Can there still be a run without rate cuts? I think so. I think the market just needs a reason. It doesn't even really need a great reason. The market just needs a reason. Rate cuts would probably be one of the best reasons right now for the market to run, but it definitely can continue to run without it. No one was talking about rate cuts in November and December of last year. We were all talking about Trump and that. It's always going to be the next thing. So I think it's a big reason. It's not an essential reason. Cade, what do you think?
Yeah, I mean, look at 2017. I mean, rates weren't cutting in 2017, and it had, in terms of percentages, a far bigger run than 2021. So yeah, definitely not needed.
Cool. How much should I be investing per week if I make 10K to 15K a year as a 17-year-old? First of all, that's great. Shout out to you. Second of all of it. I'm just joking. So what's that come out to? Let's say you're doing, let's just throw an average out there. You're making $1,000 a month. I would assume that's after tax, or you're getting paid in that cash. Shout out to you. I think $100 is a great place to start. I remember whenever I was your age, I was usually doing about 10 or 20% of what I made towards it. I didn't have rent. I didn't have bills. I didn't have any of that. So I was able to throw like 20% out, my portfolios. I think it's a great place to start, but obviously there's so much that goes into that, but it's just a ballpark. Throw it out there. I personally these days invest about 40% of every dollar that I make, but I can do that because of my situation. So it just depends on your situation, but curious your thoughts, Cade.
Yeah. So really good question. And this is also a really good question to show why we're not financial advisors, because obviously I don't know your situation. I don't know if you have living expenses. I don't know if you're supporting yourself. I don't know where you live. I don't know what cost of living is, right? Like I don't know any of this. So I will explain to you my perspective through my kind of previous experience, but this is a perfect question to explain like why you really do need to just kind of like, you can take what we say with a grain of salt, but it should not be like used as this like comprehensive roadmap of how to live your life. So that said, my personal opinion is as much as humanly possible. That's how I've always done it. I currently invest about probably 70 to 80% of what I make, mainly because I'm a psychopath and I am okay living extremely cheaply and kind of cutting some of the luxuries that many other people might be okay, keeping in their budget. So especially when I'm starting to loosen up a little bit, but especially when I was younger, I lived incredibly frugally. And 10% is great. 20% awesome. 30% better, but like I got to the point where I was like, I had hyper tuned my budget. So I was able to invest about 80%. So, but again, what's life if you can't enjoy it for at least a little bit? So you do need to really kind of understand kind of the give and take there.
Yeah, 100%. There you go. All righty. How do you approach highly volatile coins who historically pumped and dumped massively? Put a little bit in and don't put a lot in. Easiest way to go about it.
Yeah.
Go small. Small positions can make big gains in this market. Trust me. Okay. Alrighty, let's see. Someone hates Belgium. That's an interesting. Okay, Ben Cohen's theory on the alts bleeding into BTC until they hit 0.25 lows on Bitcoin alts pair seems to be playing out. I do typically agree with what Benjamin Cohen says. The only issue, the only dilemma that I have with that theory is it's putting almost like an arbitrary goal for Bitcoin altcoin ratio for almost no reason at all, right? You don't know what might happen in the altcoin market that could trigger a change between alts and Bitcoin that completely reshifts the dynamic between Bitcoin and altcoins, right? You might have a major institution that comes in and starts buying the shit out of Bitcoin out of nowhere for no reason whatsoever that will almost make it humanly impossible for certain ratios to be met. Or the flip side, right? If an institution just jumps in right now and starts buying more Ethereum than anything else, it'll be incredibly difficult for Bitcoin, the Bitcoin dominance ratio to end up at certain thresholds to the bottom side, or towards the top side. So to me, it's just like there's no point in trying to set an arbitrary number of like, okay, Bitcoin dominance will hit 0.25 and then that'll spark it. I think Bitcoin dominance is very responsive to the dynamic between Bitcoin and altcoins, which solely relies on what happens from more of like an economic perspective or a macro perspective, right? Institutions coming in buying Bitcoins completely start shifting around that dynamic. And I think where we are right now as a crypto verse, as he likes to say, in the crypto verse, is completely different than where we were 4 or 5 years ago. So I rarely look at historical performance of Bitcoin dominance to make a determination of what I think the levels that it should reach are. Because I can look at Bitcoin and say, I think Bitcoin can hit this because historically it's done this, because Bitcoin's in a very similar situation. Whereas the ratio of Bitcoin to altcoins is completely different because of who's buying it and why they're buying it, when they're selling it, manipulation, etc. So the only quarrel that I have with his theory is the set specific goal of where Bitcoin dominance goes. But all right, and Kay, do you have any other ideas towards that, or pretty much agreed?
Yeah, I mean, he's basically been right at this point, so I've got no reason to doubt it. I think the biggest thing to watch there would just be how Bitcoin dominance reacts. We kind of saw this in November and December. We kind of saw this like super big crash and then like an immediate run right back up to above kind of that larger macro trend line that we've been holding. So if we start to see something like that, then maybe that's possible.
Sure. Agreed. Cade, ETH or ICP?
I love ICP, but I just think from a pure risk perspective, like ETH, I think ETH is a lot larger ecosystem. They've got a much larger backers. It seems like Robinhood's going to be building on ETH. Seems like, Base is obviously already on ETH. Coinbase is huge. Like from just like a risk adjusted perspective, if I could only pick one, that would probably be it. However, like that's why I diversify and I have both, right? But like I do have a larger position in ETH than I do ICP. But, again, kind of as we were talking about earlier, if the upside on ICP holds to the level that we think it could, it's not going to matter, right? I mean, even if it was 1% of your portfolio, it's still plenty. So yeah, to me, position sizing and diversification is everything. So
yeah. Love it. Now, we both agree that France and Belgium sucks. The argument continues. Kay, do you like me? Coming from Scopum.
Yes.
Good to know. If you live at home / have no bills, invest all at the right levels. Saying go all in with it, which you're not taking a ginormous risk. Like,
yeah.
Okay. Let's see. Tyler, what do you think about the 4-year cycle and what impact do interest rates and liquidity have on alt seasons? So 2 questions there to answer your first question. I think the 4-year cycle is a very real thing. And the reason I believe it's very real is because people think it's very real. I think what people tend to forget is that the reason why 4-year cycles happen is because certain things happen throughout the course of 4 years repeatedly in crypto that spark certain psychological reactions, right? The Bitcoin halving, there is still a world in which the Bitcoin halving leads to the entire crypto market dumping. That's possible if people equate the Bitcoin halving to something bad. Yes, I understand the reduction in supply being generated. I get it. But the truth is, you have supply, you have demand, you can have whatever you want to have. If people started saying, oh, the Bitcoin halving is a terrible thing for altcoins, and that's just what we believed going forward, every time that Bitcoin halving comes around, altcoins are going to dump. That's not the way people look at it. People look at the Bitcoin halving in a good way. People look at these certain periods of this 4-year cycle in a certain perspective, which prophecies write themselves in many capacities, right? Like, it's just a self-fulfilling prophecy of a 4-year cycle. My opinion, though, as time goes on, we are going to fade away a bit from the 4-year cycle as the crypto market ages. I think it's naive to assume that we're going to stick to a 4-year cycle when the crypto market is 150 years old. Now, I know none of us will be around except for Cade to be there, but I think it's naive to assume that we're going to stick to a 4-year cycle when we have 10 years, 15 years, 20 years of data to understand, right? It'll be a small piece in a much bigger puzzle. The question is, what does that look like over time? So to answer your first question, I do believe the 4-year cycle is a real thing. I think that it has many impacts on people's psyche, and that does cause them to make certain decisions that allows the market to move how it moves. But I think time goes on, we'll move away from it. To answer your second question, I think that interest rates and liquidity have the biggest impact on altcoin season of any of the things. I think altcoins are solely reliant on retail investors, and retail investors are solely reliant on the amount of money that they have and have access to. If no one has money, no one's buying altcoins, and it's just that simple. So if people have more money, which can happen as a result of interest rates being cut in some capacity, and they have more liquidity, well, next thing you know, altcoins typically perform better. Risk on assets historically perform better in environments that are favored towards risk on assets. And so having better liquidity and lower interest rates is a good thing for alts. So I do personally align those two together, though I don't believe alts need lowering interest rates in order to see great performance, and the last 3 years shows that. So, okay, do you have any disagreements with that?
No. Yeah, I mean, I think liquidity is a requirement. Interest rates not necessarily. Like you said, they shouldn't be rising, but I don't think they necessarily have to be falling.
Yeah. Exactly. Good news. Kate turned my $10 into 10 Indian rupees. Best financial advisor. Hey, I mean, what can I say? I told you guys I put him on. I want affiliate commission. Do you think proof of work and proof of stake still play a role in the value of a cryptocurrency? Not nearly as much as they used to. I think it's important to know, but I not really. I don't think people care about stuff like that as much, personally. Historically, rate cuts lead to a short-term pain that always comes with a reason. They always come with a reason. Yeah, I do agree. I mean, that is historically accurate. There have been periods in history where softer-ish landings have been followed by very gradually small interest rate cuts that don't lead to like these big blow-ups. But yeah, I mean, when people talk about these periods where interest rates have just nuked, it's for a reason. I don't see that reason on the horizon for us right now. So it's an interesting, I don't know, like they might just get peer pressured into it. How do you turn 300K into 1 million this run, Tyler Hill? $300,000 on a 100x leverage long trade with no stop loss. That's one of the ways to do it. That's not the way you should do it. 300K into 1 million this run is a stretch. It's doing that without taking ginormous risk is incredibly risky. But I do believe diversifying across the top 10 and giving it 6 years should give it a 3x. I don't think there's any reason as to why that's not possible. Okay. My largest holdings are HBAR. Uh-oh. 1 second. It's not letting me click. Oh, I think my mouse died. That's joyous. There we go. My largest holdings are HBAR, SWFTC, and FLR in that order. Bought all of it over a year ago and happy. Well, that's an interesting spread. A little risky, I would say. A little bit risky, but hey, to each their own. I like the conviction. Cade likes it too. He says you should buy more. I think U.S. announcing buying strategy will be the catalyst, not rate cuts. I'm not quite sure if the U.S. is going to come out anytime soon with a strategy to buy crypto. I think they've made it kind of clear that they're more focused on getting the legislation in order first. Like they're trying to get all the foundation put in order before they just start buying it, because buying it is like commitment. You're using taxpayer dollars generally to start buying cryptocurrency. You better be sure that everything else is aligned first. I think it's more likely that we see interest rates get cut before the U.S. just starts at mass buying crypto. Do you agree with that, Caden?
Yeah, I don't think. I think the sentiment that the U.S. is going to be buying crypto is kind of nuts, to be honest. Like we don't even have a legal regulatory framework yet of how to buy crypto. So how are they going to buy it, right? Like to me, that doesn't make a lot of sense. I think, in my opinion, the key catalysts are going to be the Genius, or I guess the Genius Act already passed, the Clarity Act, and then the possibility of altcoins getting ETFs. Those are the two things that I'm looking at that I think would be major for the crypto market.
Altcoin ETFs is a great point. One that I literally blanked on this whole stream. It's one of those. Like you come out, dude, someone comes out, one of the big ones, they come out with an XRP and Ethereum ETF, all hell breaks loose. And rate cuts not cut, doesn't matter. It won't matter. No one cares. It's going to send and the liquidity will go down. Now, what's interesting, speaking of those two, someone says, Kay, do you think with the likes of XRP, XLMs, RWAs, etc., this will be the last 4-year bull run cycle and instead be a continuous pump? So many people look at the stock market over a long enough time horizon and say that it's just consistently just gone up. There's not these big 4-year pumps and dumps. Do you think that that's going to take effect in the crypto market as a result of, I guess, all the stability, RWAs, all that stuff?
Yeah, I think like, I think right now, the thing people complain about the most is also the biggest set of crypto, which is the volatility. The value is the volatility currently in crypto. The same reason it can go down 20% in a day is the same reason it can go up 20% in a day. So if you understand that and you know how to play it and you can disconnect from your emotions, that is wildly valuable, right? I mean, if you look at the stock market, part of the reason that it's so stable, so to speak, is because not only do you have a much wider like pool of buyers and sellers, and not only is the liquidity much deeper, but you also have to understand that there's an unbelievable number of what they call like exotics, right? Like you've got calls, you've got puts, you've got spreads, you've got hedges, you've got futures contracts, you've got like long, short, all of the things in all different directions. And so there's a lot of like, all of that is essentially put into place in a sense to kind of kill the volatility, right? Because you can't have a super run one direction or the other because it's just hedged 7 ways to Sunday. And so we don't really have any of those financial instruments within crypto yet, which is why it's so volatile. So the more professionalized and institutionalized and all this type of stuff that the crypto space gets, all of that is going to get clamped down on because 1, there's going to be regulation, and 2, there's going to be much more diverse financial instruments that allow people to do all of these more complex things that generally kill the volatility.
Yeah. That makes sense. And I agree. I mean, I don't even really need to add on to that. I completely agree. And I appreciate everybody asking their questions. Well, look, we're at 2.5 hours in, so we're going to go ahead and wrap this bad boy up here. Look, again, I know it's been a while since I've been streaming, but just do know we have some stuff cooking in the back end right now that I think you guys are going to be extremely, extremely excited about. So with that in mind, Kate, I appreciate you coming on and just kind of giving your thoughts. Obviously, a bit of a nuance to the environment that we're in right now in the crypto market. So always good to get a second opinion. If you guys did enjoy Kate's opinion, or if you want to actually subscribe to a financial advisor, you can check out the link down below. I'll also go ahead and post it in the comments right now. Feel free to go ahead. Feel free
I'm
to
not
go
a
ahead.
financial advisor.
Of course he is. Feel free to go check out that link in the comments down below. Now let me go ahead and give it a little pin real quick if I can. I don't know how, but it's right there. Feel free to go do that. All in all, though, guys, we are going to be posting a ton of content coming soon. In the meantime, make sure you go get the playbook. There's a ton of free educational value there. Make sure that you do go follow me on Instagram. There's a ton of content we post every single day there and much more. But all in all, thank you everyone for joining in. Thank you, Cade, for joining in as well. And we can't wait to see you all in the next one.